Cool. All right. What up, everyone? Welcome back to Financial Education and Business. Today, I'm going to be talking about BMNR. This is practically a company that's publicly traded that holds on to Ethereum and purchases Ethereum by doing a couple things: selling shares into the open market, diluting share owners, but at the same time, they'll issue bonds if they have to. They'll sell their stock at a premium and buy some of the share. So in this example, as you can see, it just kind of shows here what they do. BMNR is the leading Ethereum treasury company in the world. What they do, and the only thing they do, is buy Ethereum and accumulate Ethereum the same way that a company like MicroStrategies uh, does their business. So practically the known goal um, is that they want to buy 5% of all Ethereum that's out there in existence, not just the supply. And so they are doing a really good job in in accumulating, and eventually, let's see if I can search um, BMNR ETH purchase chart, historical chart, So I've been mining technology, so we should be able to historical stock price, Ethereum technology price. Let's see if how do you find this? Let's do it this way. Let's use AI. So I need to see uh, um how much if they purchased over time. Let's see. Historically, that's what we get. So I need a chart. Show me a chart. So this is kind of all right, that's terrible. So earlier year, Ethereum launched the bull market wrap. This does not help, but what we're interested in is um, BMNR's Ethereum purchase over time. Yeah, I think that's better. Ethereum chart strategy. Oh my goodness. So it's not really working. Alright, so I'm not able to find it, but the company has done a pretty good job of purchasing Ethereum. BMNR ETH purchase history. Let's see if I can find that chart. Tom Lee and BMNR now own more. So maybe this would be this might help a little bit just to see how much they've bought. So on Twitter here, you can see Tom Lee and BMNR now own more than 2% of the total Ethereum supply. BMNR just adopted their holding, updated their holding. Here's what they currently own. They own about 2 million Ethereum, up from 2.4 million shares, up from 2.15 million ETH on September 14th. And this came out on September 22nd. As you can see, from September 14th, September 22nd, within a couple weeks, they went and bought a ton more Ethereum. And looks like they bought 192 Bitcoin, and then they have 345 of they have 175 175 million stake in Egotech. I think that's another like tech, probably a Bitcoin based company. But if we just go into their site and we just read, they say that we are committed to ETH as our primary treasury's reserve asset, leveraging native protocol level activity, including staking, decentralized finance mechanism. Our disciplined approach to increasing the ETH held per share creates a self-reinforced cycle that contributes to Ethereum's economic security while positioning shareholders to benefit from the growing stablecoin market and tokenized asset ecosystem. As a category definition digital asset platform, our treasury strategy is designed to materially enhance returns for shareholders through a strategic accumulation capital market activities, in particular the Ethereum expanding ecosystem. By securing the growth of the ETH supply, we drive in institutional capital and real-world assets on chain, creating a long-term value on digital asset revolution. So Tom Lee, I mean, everybody knows that he was very bullish during the April lows when Trump decided that he was going to um, do the whole tariff. Tom Lee, a managing partner and head of research at Fundstrat, chief investment officer of Fundstrat Capital, and chairman of board of BitMine. He is accomplished Wall Street strategist with over 30 years of experience in equity research and has been consistently top ranked by institutional investors since 1998. So he knows what he's doing. Prior to co-founding Fundstrat, he served most recently as JP Morgan's chief equity strategy in 2007 to 2014, and previously as managing director at Salomon Smith Burney. He is also a full-time contributor at CNBC. And then you have Jonathan Bates and Raymond Mao. I mean, they're known, but not as much as Thomas Lee. So if we were to go into their investor relations and look at press release, you see BitEmergent announces price. So they, as you can see, they're always issuing shares. So in this case, you see that on September 22nd, they issued 365.24 million registered direct offering at $70 per share. And obviously they went and bought, millions of dollars of worth of Ethereum. Now the company holding of Ethereum exceeds 2% of Ethereum network, with ETH holding exceeding 2.4 million tokens, and total crypto cash holding at 11.4 billion. I think about 9 billion of that is in Ethereum. BitMine announces crypto and cash holding of 10. That was September 15th. And then they go right into 11.4 billion. So as you can see, like, their cash to crypto volume consistently is just, all over the place, but is continuing to go up. Ethereum on its own is a very interesting system because what Ethereum does is it's literally, think of it as the bedrock of technology. There's no other system out there where you can just create a wallet, actually get onto a financial rail, and while you do that, at the same time you create a wallet for yourself, and you can do transaction anywhere in the world. And so it's like a bank in your pocket. And what a lot of people do with Ethereum, I'm sure you know, is that Ethereum allows users to developers to be able to develop on the security scalability of Ethereum. Ethereum is literally the foundation, the bedrock that's safe for a lot of governments, banks, institutions to be able to build their platform off of. One thing that's unique about Ethereum is it has, in the long term, it's one of the only technologies that hasn't actually failed, and hasn't had like a downtime at all. If you ever had problems with your Ethereum before, or something not going through, it's not because of Ethereum is because of the platforms that you are using that can't handle whatever the case that might be. When obviously when there's a lot of volatility, things like that, things like your transactions not going through does impact it. One thing that a lot of people don't like about Ethereum is it's slow. And that's why it's slow, and it can be costly as the volume of transaction occur on the system. Obviously, that is being solved by a lot of companies that are building on Ethereum itself. But there's also other competitors in the landscape like Sol, Sui, and XRP. They want to all they all, maybe not XRP as much, but specifically Sol, Solana, and Sui. They want to get into this industry and have some kind of impact. So, and so what I've done is I really am seeing just the long-term strategy for Ethereum. I think it's going to do decently well, and I think that as we continue into this like technological revolution, and as we get into this agentic world, we're going to have a way not only for people to transact, but for these agents to be able to transact between themselves. And so if you were to do that in real world currencies, it's going to be a lot more difficult. But because you can build like some kind of technology on the blockchain that allows these agents, now I'm talking about agentic AI, for them to be able to do transactions using any type of crypto, allowing them to pay any company to source their data or reference their data during whatever um, during the AI's research roadmap, then these AIs are going to need some kind of like money, AI money, agent money that they're able to, a company is able to give to the AI, and the AI can go into the real world and actually do real-time transactions, real-time research. And if it cannot get that data, companies on the back end can give these agents access with a little bit of blockchain money. And in this case, I think that blockchain money is going to be built on Ethereum or other platforms. So practically, I'm just going to go through. We're going to watch some videos on what Tom Lee says about the company, and just maybe I can go through and I can pause this video. I can go through and show you if there's anything else that's actually interesting to see here. Um, so this article kind of breaks down like what what BMNR is trying to do. It does a forecast of Ethereum MicroStrategy moment, forecasting into 2020 into 2030. A deeper look into BMNR's accumulation model, Ethereum role. One thing is nobody really knows BMNR's accumulation model. Besides, nobody really knows how they buy their Ethereum. They can't just go out there and just buy it off the market. Right now, we've seen them, acquire it from specific companies like Galaxy Digital. I think they bought, a couple million. The last purchase they did was from Galaxy Digital, but nobody really knows where and how they're actually buying the Ethereum. But they know how. People know how Bitmine is raising the money. So if I didn't tell you, so Bitmine is a publicly traded Ethereum treasury vehicle that has embraced an aggressive metadata. So practically, they're aggressively buying Ethereum. The company is not operating like traditional business with revenue streams, product line, or legacy operations. And so this allows the company actually, in some ways, they don't have they don't have products they're selling. The product they're selling is the company and their goal and their mission. And so their mission is we're gonna buy Ethereum. And so nobody's really having to sell that product. The product already sells itself, and there's a company on the other end that just says, hey, we're gonna buy Ethereum, this virtual blockchain system that they think is going to be used by the entire world, including governments and institutions as well. So All they're gonna do is just buy Ethereum, which means that the overhead cost is gonna be very small, maybe high on the marketing cost, but yeah, not much product line, not so much of like an operational perspective, not a lot going on there. Instead of functioning as a balance sheet and entity designed to accumulate ETH and creating uh, equity market access for those who cannot or will not hold Ethereum directly. For a lot of people, it can be really complicated to actually go out there and buy Ethereum. And if you go buy Ethereum right now, you put your money in there, you buy Ethereum, you're only going to get that amount that you buy. But with a company like BitMine, who is publicly traded, whatever you buy the stock for, they actually go out there and buy more Ethereum on your behalf, which is the kind of company you really want to be with. Because maybe you don't want to buy Ethereum every quarter or every month, and you don't have the money for that. But this is the company that really is very focused on kind of accumulating that wealth and accumulating Ethereum into your portfolio. And over the long term, if we're saying Ethereum's going to, let's say, $15,000, then this is the company that you'd want to be in. So this strategy is straightforward but carries a profound implication. BMNR is positioned itself as Ethereum along to MicroStrategy Bitcoin Bet, which has become synonymous with Bitcoin exposure. And once again, once BitMine starts growing, I think you're going to have a lot more institutions that are going to start covering it, and I think you're going to see a lot more people actually jumping into it. And this is the kind of company eventually that you're going to see jump into the S&P 500, just like MicroStrategy did. And at that point, that's when the price is actually going to take off, and from there, literally they can raise billions of dollars, and they can do a whole bunch of other strategies to continue to grow that Ethereum value. The cool part about Ethereum is that you can you can buy Ethereum and you can stake it. And a lot of times when you stake Ethereum, you actually get returns on it just because you're staking it. Ethereum is a proof of ownership. So if you when you buy it and you own it and you stake it, it's proving and strengthening the network, and therefore the company or the algorithm is built out to actually reward those people that are helping strengthening that network. So, and in the future, in this case, because BMNR is getting like staking rewards, this money can go to shareholders as a form of dividend. This is something that Bitcoin currently does not even have at all. Actually, it's not built to be that way, because Bitcoin is a proof of work and not proof of ownership, proof of stake. And that's why, yeah, let's go on. As of September 2025, BMNR has established itself as the largest Ethereum treasury in the world. It holds more than 2.15 million ETH with $10 billion in combined crypto cash in reserve. Importantly, the company has secured authorization to 24.5 billion at the end at the market equity program. Given its tremendous operational and scale, it's holding further. So practically, actually, what they have said is BMNR, like they don't care about the stock price. If the stock price goes up, they actually have a stock repurchase program where they will, if the value of Ethereum they have is below this like the stock price, or and there is vice versa, they're willing to go and buy the stock off the market, because what they're gonna say is, listen, um, we have the stock price currently is way undervalued, and what we're gonna do is we're just gonna buy it in the open market because we like our company, we like what we're doing, and so if the market is not gonna give it that respect, then we will, because over the long term their strategy is not gonna change. So let's keep going. By combining aggressive capital raising with opportunistic buyback program, BMNR has created a structure that can expand. So yeah, let's go into Ethereum. Ethereum is the world's leading smart contract platform. It represents a fundamental building block of modern digital infrastructure. Unlike Bitcoin, which primarily operates as a static store of value. Ethereum is both digital currency and programmable network that powers decentralized decentralized applications, tokenized assets, and stable coins. And so the cool part about this right here, the fact that it's a programmable token, is it allows like a lot of the people that don't have banks. Think about like people in certain areas that can't afford a bank account. Well, eventually they're gonna have a wallet, and their wallet becomes a bank account, and that money that they have in their wallet, they can be anywhere in the world, and anyone and everyone is going to see that as money, which is the cool part. And over time, as the network grows and as people adopt it, it's going to become even more and more of a real thing, and it's going to be used by everybody across the world. It is simultaneously money, collateral, and infrastructure. ETH is used to pay transactions fee, to stake and secure the network, and to participate in the growing universe of decentralized finance. Ethereum design allows it to function as both a settlement layer and a compute layer. It is whether it is where stablecoins where token treasuries live, and where decentralized lending and exchange operate. Importantly, Ethereum is productive collateral. Through proof of stake, Ethereum can generate native yield while securing the network. This introduces compounding characteristic of Ethereum profile that Bitcoin does not possess. Ethereum's unique blend of utility and security makes it a candidate to become the backbone of financial transaction worldwide. And obviously, you're seeing a lot of talk in the United States, across the world, that companies are going to start buying Bitcoin, Ethereum, um, ADA, Cardano, and they're gonna hold it as their as one of the cryptos in the government's treasury. So I think Ethereum definitely has room for that. And there's a lot actually. Even by the end of this year, the government is gonna say exactly what they're gonna do and the structure that they want to. They want cryptocurrencies to operate in the United States, which really is really good um, which is a really good proof that there are countries, especially the United States, that is one of the strongest countries in the world, taking this seriously. Um, so structure mispricing of BMNR. So markets continue to misprice BMNR because they frame it only as ETH proxy. This is the same kind of misunderstanding. Blah blah blah. Iron. BMNR equity is not just ETH exposure, it is a capital structure machine with the ability to issue equity into a strong demand. Buy back shares when trade below NAV, net asset value, and maintain a cycle of expanding ETH per share. So this is what I was saying. If the market doesn't respect BMNR, the stock itself, and the stock is trading below the net asset value, then BMNR is just going to go in the market and buy their shares. They actually have put hundreds of millions of dollars on the side just in case this happens. This is not being valued. This is not being valued appropriately. Where many see dilution risk, those who understand see a mechanism for compounding NAV per share. The misunderstanding creates opportunity. BMNR's execution on this strategy could deliver return that far outpaces Ethereum. BMNR's flywheel strategy, straightforward yet powerful. It issues equity, so stock, when market demand is strong, and converts those proceeds directly to Ethereum. Let's say the stock goes up to $80. Let's say it goes from $50 to $80. They're gonna sell some of their stock, and they're gonna go and buy Ethereum, and because that's exactly what they want to do. This expands the treasury, increasing NAV. As NAV grows, more investors become attractive to the equity as a regulator way to hold Ethereum. which increases liquidity and market depth. A stronger equity base then allows BMNR to issue additional capital at a favorable term, further compounding ETH stake. This cycle mirrors uh, Amazon quality built Amazon Web Services. Later, Project Cooper, or how Tesla scaled its Megapack business. Each began as a misunderstood side play but evolved into hidden infrastructure flywheel that transformed their parent companies. BMNR is attempting the same process in finance, using capital market levers to systematically build one of the largest ETH treasuries in the world. There's other companies that are competing to become one of the largest treasuries in the world, but no one's doing it like BMNR is. So if we are to look at, I did pull up a that didn't help. Is it here? 13 biggest company acquiring. So this is August. This is kind of old. So if we were to look here, Ethereum treasury companies. So CoinGecko, obviously, this is very specific to like cryptocurrency website that you can get news on that. But as you can see, right now, BMNR has one of the largest Ethereum holding. They hold over 2.4 million. The second place is SharpLink. As you can see, activity in the last 30 days, BMNR has bought 702,000 Ethereum, while second place, they're holding about 95 million, 95.5, so 96 million Ethereum. Sorry, 96,000 Ethereum. This is like the competition right now. It's not that big. And some of the competition is an exchange. Like, they're not, like, for example, Coinbase. It's not what they do, right? They're not going to ever catch up. Eatzilla, there's a chance that there's a small chance that this company here, this publicly traded company, is going to get bought by BitMine. And obviously, this is one of BitMine's strategic way of expanding their Ethereum holding, not just buying Ethereum in the open market, but buying out companies that already have hundreds of thousands of Ethereum, or buying it from companies themselves, or buying the company out itself. So here you go. Most likely, this is a publicly traded company that most likely could be bought by BitMine. Right now, BitMine is at the top. Totally, it looks like total value of $10.10 billion in total value. But let's keep going in this article. The buyback lever as optionality. BMNR's 1 billion stock repurchase authorization is one of its most underappreciated strategic tools. The buyback allows BMNR to shrink share count when its equity trades below NAV. This is particularly powerful in volatile markets where discounts to NAV often emerge. By repurchasing stock in those conditions, BMNR supports NAV, reducing float and increasing ETH per share for remaining shareholders. It is an anti-cyclical mechanism that improves shareholders' outcome precisely when sentiment is weak. And so this is kind of interesting because let's say they issue a whole bunch of stock, and then you might say, oh, that's so dilutive, like my stock, like this stock used to be like, I think it used to be at $60, but then BMNR issued more shares, it diluted shareholders, the stock price went down. But if the stock price keeps going down, well, BMNR's $1 billion stock repurchase authorization they can easily go in there and just buy their own shares, and then get the Ethereum to stock price really change significantly. So that's why BMNR, I think, is doing the best thing right now. I think they're probably, one of the better buys right now. I mean, they're still not that big. They're nowhere close to the 90 to 100 billion dollar stock that um, a company like MicroStrategies is, because MicroStrategy is what, $92 billion, and Bitmine is nowhere close to that. I think they're approximately at, what is the market cap of these guys? I don't have this. Damn, I don't have it. I don't have it. Something I'll have to add, but they're in the what, $10 billion. So it's BMNR strategy is very smart. Issue shares, buy Ethereum, and then when the stock price goes down, then they're gonna say, you know what, we're gonna go buy Ethereum, and then they bring the shareholders back and forth. On the flip side, BMNR can issue equity during period of optimism, expanding its treasury when the market is willing to pay premium. So when the stock price is, up 60, $70 or $80, the stock price right now is what? $54. If the stock price ever goes to $80, they're just gonna issue more shares, take that money, buy more Ethereum, and then continue to accumulate Ethereum and be one of the best Ethereum holders out there. So this dual capability creates a structure advantage. Few other equity vehicles in the history have operated with this kind of flexibility playbook. Over time, the buyback lever could prove just as valuable as accumulation ETH itself, because it ensures that BMNR equity remains tightly tethered to NAV while retaining upside for narrative-driven premium. So notable participants, I mean, you got Tom Lee. Tom Lee founder Fundstrat. I mean, he's he's been in the markets for a long time. Lee brings not only credible, but I think he's well known in the equity markets. Um, Kathy Wood has a significant amount of shares. Kathy Wood, through the ARK Invest, has become a meaningful shareholder of BMNR. ARK's ongoing purchase of BMNR across its ETF adds legitimacy and visibility to the story. The participation of institutions like ARK signals to investors that BMNR is not just a speculative vehicle, but emerging technology. And obviously, that's exactly what ARK is about. Um, so BMNR versus holding ETH directly. So this is something I was talking about. For many investors, decision is not whether to buy ETH or BMNR, but why BMNR might be preferable. The case for BMNR lies in its structure. Holding BMNR shares gives you investors liquidity in public equity markets, tax treatment advantage in certain jurisdictions, and optionality for capital market actions such as buyback and issuance. I think this is still the most impressive part here is they can they can they can buy their stock, they can sell their stock, and continue to increase the number of Ethereum shares that they hold. So the strategy is the risk of dilution and the reliance on management execution. Investors must trust BMNR Tom Lee, his leadership, to balance equity issuance and buyback in a way that maximizes Ethereum shares. While direct ETH ownership offers simplicity, BMNR offers a structured leverage. It is not just exposure to ETH, but exposure to vehicle designed to outperform ETH through its financial engineering. Um, so BMNR versus MicroStrategy. I mean, I'm not going to go through that. BMNR holding and positioning September 2025. So this looks like this is how BMNR looks. They have about 2.1 million in Ethereum. They have 192 Bitcoin, probably more. So this is of September. It doesn't say exactly what date. And then they got so 8Co, and then I think this is cash. But they've also partnered up with another company that is kind of questionable. That they use the blockchain to kind of confirm people's how do you say people's identity via the blockchain using their eyes, because your eye has every single person's eye has a specific structure. So anyways, Ethereum went on, Bitmine went on and invested in that company. So as you can see, this is the current breakdown, but I think it's more than 2.1 million shares. The company has also authorized a 24.5 billion at the market equity program, given its enormous firepower to expand its holding further. Finally, BMNR has 1 billion buyback authorization, giving it the ability to support the and compress discount in the weak market. Valuation, NAV, premium, 2030 scenario mapping, ETH price. So practically bear case, if Ethereum at $5,000, then BMNR should be sitting, the stock should be sitting what, $125 to $140. As you can see, conservative case, he's saying that if Ethereum is at 10, then BMNR should be at $260 to $300 share. Base case ETH, um, base case ETH. So this $15,000. Tom Lee himself has actually said, "Hey, I think by the end of the year, Ethereum is going to be $15,000." And if that's the case, and this is the same guy that really thought he said this is going to be the most hated reversal market ever. So when Trump issued the whole event in April, and he said, "Oh, the stock market, I'm gonna put in 100% tariff on China, whatever that was," um, and that's when Tom Lee, right, the chairman of Bitmine, said, "Listen, the market is gonna recover faster, and a lot of institutions are gonna hate it." And as we can see now, months later after April, institutions hate it. There's a ton of money, that's sitting on sidelines. So he's guessing that Bitmine, Tom Lee is saying, you know what? He said this, that we could see that Ethereum could be at $15,000. So when he says things, I think people take him seriously because he's really proved himself throughout, throughout history that he can't. He doesn't just say stuff just to say. So all that to say, if Ethereum does hit $15,000, we're looking at $390 to $440 BMNR per share, which would be pretty impressive. If Ethereum gets to that $15,000, which sounds so crazy, it doesn't even. I don't even know. Right now we're sitting at $5,000 per ETH, and he's saying we're going up $10,000 from where we are right now per share, and that is valuing the company at 105 to 120 billion dollars. That means per share that they're going to be worth 390 to 440 so dollars a share. So let's say you put in $2,000, $3,000, and right now it's $50, $54, and if even conservatively it goes to 10K, that's 5K from where we are right now. Well, we're seeing $260 to $300 a share in Bitmine stock. So it could be possible. It could be something doable. So bull case, ETH. Oh man, this just doesn't seem right because it just looks crazy. It could happen if I think with a lot of this, like this case, I can see this happening just because there's a lot of new regulation that the government is going to be issuing that really is gonna have the company take off like significantly. So if the U.S. government comes up with some kind of paper or some kind of guidelines to how cryptocurrencies and digital assets are going to be structured, why wouldn't we see some kind of 10, maybe 8 to 10,000 dollar ETH? I don't see why not. And in a lot of ways, I think the scale is more on the Ethereum side because people are going to use ETH. It's just the way it is. Like there's a lot of development around ETH. ETH is not just like a technology. It's just like five different layers all compact into one. It does so much that that are that is currently divided between like 5 6 companies. um so yeah, so Ethereum, and then obviously the crazy upside, ETH hitting $100,000, and then your $2,000 goes up, 50 $50 share goes to $2,000 a share. At that point you can retire and don't have to talk to anybody, or say good morning, whatever. But at the end of the day, you don't have to answer to no boss. But that only happens if you're invested and you believe the path to where Ethereum is going to go in the long term. So if you do believe that, then any of this is true. If you do believe that, if you think the company is going to continue buying Ethereum, that being their stated goal is exactly what they're going to do, and they're going to buy back their stock if it ever goes below NAV, and if they're going to issue shares to buy more Ethereum to continue to increase the number of ETH that they hold, and they're proving that that's exactly what they're going to do. They've just in the last 30 days they bought 700,000 Ethereum, and as you see that, like MicroStrategy, they bought Bitcoin, and Bitcoin is what, I don't even know at what price it is right now. Um, what, 111,000, 100 and maybe $15,000 a share. But Bitcoin, it doesn't show the price. So Bitcoin being at that price, you have companies like MicroStrategy who's buying Bitcoin before it was in $100,000. What this allows, like a company like BitMine, once they start buying in the 5K, it goes to 10, 15K. It doesn't matter by how much ETH, well, it doesn't really matter that much by how much Ethereum price goes down, because their average purchase price is going to be so low. It's going to be so low. It's going to be in the thousands, um, while um, while everybody is losing money. Bitmine is actually up, 2,000% or 5,000%. Um, Regulatory structure, the largest risk for BMNR. So let's talk about risk. All right. So the largest risk for BMNR faces is regulatory risk. Ethereum classification security or commodity remains unsettled, and the arrival of ETH ETFs could reduce the structure value of BMNR wrapper. Execution misstep, managing equity issuance could also harm ETH per share. Governance decision around staking or treasury policy presents additional risk. I think the whole staking is the good way to go. They're gonna stake their ETH and give a certain amount. There's a couple things they could do. They could stake their Ethereum and get Ethereum back, or go buy more Ethereum, or they can stake their ETH, and whatever they get in return from that stake value, they can give back to shareholders as a dividend. And this is something unique that Bitcoin or um, Bitcoin cannot do, and Michael Saylor for MicroStrategy cannot do that at all. So global adoption tailwind. So Ethereum's already critical part of global financial structure. Stablecoin settlements on Ethereum rival Visa in annual volume. Tokenized treasuries are beginning to migrate on chain. Yeah, I mean, we've seen a lot of companies coming on chain. They're finding ways, like they're realizing that if they don't adopt to new technology, they're going to be left behind. And sometimes for them to build an entire blockchain system that is as safe, does not have a downtime, and has the people that have knowledge of how the system works, to have that kind of knowledge is going to take a lot of money to actually build from the ground up, versus, you know what, we're gonna just build on top of what already exists. That's most of the time the way companies go, because the infrastructure cost the security cost, the knowledge cost is sometimes it's um, un, unattainable. For example, this is a basic example of AI. We're seeing that the United States is spending hundreds of billions of dollars, if not trillions, into data centers, into AI learning models, and into building out like the best AI driven um, uh, responses and training, all this. And for countries to have that level of AI scalability, just like and invest into that infrastructure, is going to take more than half the GDP. So if those countries want to build some kind of AI infrastructure, they don't have the money. So all they can do is say, hey, come to the United States and ask, hey, can we use, you know, some of the AI infrastructure that you have? And so in a similar way, I think if um, in the same way, a lot of companies are gonna just go to Ethereum and say, can we build on your platform? Or not even say, can we build? Find people that understand the Ethereum blockchain and how to build certain assets off on the blockchain and use the Ethereum network. So the Ethereum network effects are strengthening, and its role in the financial markets expanding. For BMNR, this creates a structured tailwind. The more entrants into Ethereum, the more valuable BMNR's treasury become. I'm not even going to look at that. The narrative premium, BMNR's ability to stake Ethereum. So this is the part I keep talking about. So one of BMNR's most compelling future levers in the ability to stake Ethereum. By participating in Ethereum's proof of stake consensus, BMNR could convert its massive ETH treasury into productive collateral. Staking would generate native yield, typically in the ranges of 3 to 5% annually, which could be reinvested into purchasing more ETH, used to buy back stock, used to pay back shareholders via dividends. So this could this would add an organic compounding layer where they don't have to go raise money from anybody. Like how much Ethereum is it going to take to raise $1 billion a year in staking? I don't know. I don't know what that number is, but if they have enough ETH that they can stake to where they're making hundreds of millions of dollars every month, well, they're just going to go buy more ETH and continuously compound without lifting a finger. So in the long term, the faster you can accumulate at a cheaper price, the better in the long term. So the ability to stake also aligns BMNR with Ethereum's security model, making it more than passive holding over time. As staking infrastructure matures and regulatory clearance improves, BMNR could emerge not just ETH proxy, but as an active participant in the network's economic engine. This structure advantage differentiates BMNR from other crypto related equities and enhances long-term asymmetry. So that is something I did not think about. Well, I knew the concept of staking and that it secures the system, but if you own enough of Ethereum, you become a very valuable source of the system. So if Ethereum is something that is adopted by nations and institutions and investors and funds, then companies are going to say, you know what, and not just companies, governments are going to say, you guys are such an important value part of the network that we actually need to own some of your stock so that it's not easily manipulated and there's more stability in the market. Recent investment in Octo. So this is one of the companies I was talking about, like Octo. So this company went up 3,000%, whatever that was, in one day, because um, BMNR invested in a couple $1 million or $1 million into the company. In addition to building the world's largest ETH treasury, BMNR has begun to make targeted strategic investment. One notable example is Octo. This company is publicly traded, by the way. A company, and I think is up significantly, a company positioned at the intersection of blockchain infrastructure and enterprise adoption. While details remain limited, well, we know what they do. We know exactly what happened in this case. BMNR bought a whole bunch of shares of Octo. Let's see if we can find that. Octo. Mm, is it here? Let me go into the investor relations. Let's go press release. October. Somewhere in here. Oh. Bitmine, ETH Holding, Seeds, boom, boom, boom. Bitmine announces crypto cash holding. It wasn't one of these where they talk about the purchase of Octo. Nope. All right. I'm not gonna keep looking for it, but they ended up buying this company, and it was a very strategic. It was a very strategic purchase into strengthening the Ethereum network. If Octo succeeds, so practically Octo investment reflects broader strategic vision. BMNR is not only building exposure to ETH, but also exploring adjacents that could amplify Ethereum's role as a global financial infrastructure. If Octo succeeds, I'm sure they're going to be able to do this in the long term. This willingness to deploy capital into strategic bet shows the BMNR's management team is thinking severely steps ahead, much like how Tesla and Amazon did. Conclusion: practically, BMNR is Ethereum's MicroStrategy moment. It offers a public market wrap on ETH with structured levers that can expand NAV per share through issuance of buyback. The company is already the largest Ethereum treasury in the world, and its capital structure playbook positions it to continuously grow. I mean, this was, I thought, really good article. I'll probably leave it up and I'll tag it in the in this video at the end. So I mean, this is just the same thing, how BMNR can grow its ETH over time, and it's the same thing. So practically issue stock at a premium to a dollar value of ETH per share, issue equity linked security to monetize the volatility embedded in both stock and the underlying ETH held, income from operations and investment into more ETH, earn staking rewards, acquire DAT, trading a close to NAV. So issue a stock. I mean, they cover each way they can, but I'm not gonna go through how this is done. So it looks like here a quick comparison with MSTR. So MSTR price, market cap, BTC price, risk to consider. Some big risks to consider about Ethereum price and the premium valuation is that the trend for ETH has been upward in the long term, but downward swings have also been brutal. This is a very good point. Since we're on an upward now and near previous high, we're going to soon find out whether this level acts as a strategic resistance against us and ETH to the downside. I mean, historically, as you see, it's down, up, down. Are we really gonna say that we're just gonna crash here? I mean, I don't think so. I think especially just from the way that I see crypto and how it's being being looked at by governments, I don't think the next direction is down. I think it's juking out at 5. We're going to 6, 7, 8. Boom, boom, boom. The bottom line. So, Bitmine emerging technology is not your average investment, and it is very risky with high beta, but it offers an interesting way to get exposure to Ethereum. All right, that's seeking alpha there. We're gonna go into this video here where we have yours truly talk about the company. This is where Amit and Tom Lee, the CEO, actually talk about what a dilution and some of the problems that investors see there.
System. Obviously, those algos can go up or down, but there is a bid that is being put on this asset class. Tom, should people be worried about dilution? One concern I've had about it is, hey, Tom Lee raised $20 billion. If ETH goes up, he might, or BMNR goes up, he's going to dump shares, which is inevitable. That's kind of the function of the treasury. But is that something people should be scared about, or should they be looking at the rate of growth of ETH per share, which is going to outpace any of the dilution that happens?
Yeah, well, I mean, that's exactly the thing. A proper Ethereum treasury raising capital actually is anti-dilutive because the ones that are executing it properly can grow your Ethereum held per share. If your Ethereum held per share is going up, none of the capital markets is dilution.
Right.
That's what I think fundamentally people need to understand the model. Now, if Bitmine was trading at or below its Ethereum holdings, that should not be a time to be raising capital because that's dilutive. So any ETH treasury trading at NAV is diluting shareholders essentially by raising capital, because you need to be trading at a premium.
Right.
In fact, Bitmine has an opposite view. We have $1 billion stock repurchase program in place because if the stock becomes too cheap relative to its ETH holdings, it would make more sense to actually buy back stock. So there is zero intention for Bitmine to ever dilute its holders. And actually, I think it's been proven because, again, on July 8th, there was $4 of Ethereum held per share. And today, 7 weeks later, there is $40 of Ethereum held per share. So a shareholder on July 8th, if they looked at their forward multiple, they paid $4.50 for the stock, when in just 8 weeks, there would be $40 of Ethereum held per share. So the company massively grew ETH per share. That's accretion, not dilution. A dilution would be that if 8 weeks later, we still had $4 of ETH per share, because then we'd be like, you'd be better off buying the ETF. In this case, we've proven you've been far better off owning Bitmine than owning an Ethereum ETF, because you still only have $4 worth of Ethereum per share plus whatever price Ethereum changed at.
Right. It is quite incredible, the rate at which you guys are growing your ETH.
So there you have it. It's pretty impressive. They are like one of the fastest companies buying ETH. So this is the chairman, Tom Lee, which we spoke about. He's going to be talking about Bitmine, what they do. And so let's look at this video.
This is Tom Lee. I'm chairman of Bitmine Immersion Technologies, ticker BMNR. And this is our August chairman's message. Bitmine is building the world's premier Ethereum treasury, and our focus is the alchemy of 5%. Here are some disclaimers. And this is a table of contents of the video I'm going to watch.
So Bolt Trader Co. I think is going to be, so I was looking at this. It seems like, I don't know if you had a chance to look at this. I think this article was written pretty well. If you look at this, depending where you lie here in your knowledge of ETH, where you think it's going to go, if we're hitting any of these numbers, you can see, what they're saying ETH could be at the end of the day. So if ETH goes to 10K, is there a chance? And if it does, we're looking at a 260 to 300 BMNR per share. Right now, that is the fact is $50 a share. I think we have a long ways to go. At 5,000, they're saying it should be worth somewhere in the 125 to 140, but it's nowhere close to that. And yeah, I mean, if you do think that ETH is gonna go higher, I think definitely your $100 a share is bear case. I think it's gonna go much higher, but it is a bear case.
Walk you through. First is, let me just start you with an introduction. Our philosophy is to build the premier Ethereum treasury.
And we're achieving this by also delivering exponential growth. And we have some critical partners here, including Mosaics, Capital, Pantera, Kraken, Founders Fund, GSR, FalconX, DCG, and Galaxy. And we're doing this by delivering shareholder value through a series of steps. And I'm the chairman of the company. Now, I wanted to focus this video on a couple of things, the Ethereum macro trade, and also understanding the network value. That's really what we're going to focus on this month. And in terms of the macro trade, I want to take us back to 1971 when the dollar went fully synthetic. And what I mean by that is that in 1971, President Nixon ended the convertibility of the dollar to gold. So in other words, the dollar was no longer backed or exchangeable for gold. It was only exchangeable for other dollars. Okay, so what does that mean? Well, that means that in 1971, the dollar became fully synthetic. Now, people in turn went to find a store of value, which was gold. But keep in mind, that really wasn't the only thing that happened in 1971. In 1971, someone had to create a market for the synthetic dollar. Think about that. All of a sudden, we had to make sure people would be willing to use dollars, especially because it was no longer backed by gold. Well, the winner there was Wall Street. And let's see how this move by Wall Street created the innovation boom. In that 15 years after the 1971 moment, Wall Street created many innovative products. They created money market funds, currency futures, debit cards, mortgage-backed securities, currency swaps, interest rate swaps, S&P index futures, zero coupon bonds, CDOs, and even ETFs. All of that happened following the creation of the synthetic dollar. In fact, of the 30 largest companies today, 7 of these are financial institutions. So you could see Wall Street was a huge winner as we created the synthetic dollar. Well, Ethereum is having this 1971 moment. And what do I mean by that? Well, there's a couple of things that happen. The Genius Act is creating the stage for a stablecoin boom, and I've covered this in the previous video. And SEC's Project Crypto is moving Wall Street onto the blockchain. Wall Street is going to financialize the entire system, the existing system of real-world assets onto the blockchain, but they're also going to create inefficiencies by itself moving their architecture onto the blockchain. So in our view, Ethereum is having its 1971 moment, where the real-world assets are becoming synthetic or tokenized. Treasury Secretary Bessent sees this becoming a multi-trillion-dollar market for stablecoins. And it's not just stablecoins, but banks are already moving to build products on Ethereum, whether it's JP Morgan, Robinhood, Goldman, Bank of New York, even Walmart and Amazon. So what does this mean? Well, in 2025, as the real world becomes digital, it's going to be natural to say, I want to find the digital store value, and that is Bitcoin. And I'm a believer in Bitcoin. But it's also going to create a market for digital assets. And we think the winner there is Ethereum. And in fact, Wall Street is building here on Ethereum. So let's just think about one story arc. What is Wall Street going to do to innovate on the blockchain over the next 10, 15 years? Well, they're going to build stable coins, tokenize equities, credit, tokenize real estate. They're going to monetize reputation, even monetize intellectual property. And a lot of this is happening on Ethereum. For instance, this is a tweet from Adriano Feria that Ethereum added $6.3 billion to stablecoins just in the last 7 days. Well, that's more than half of all the stablecoins Solana has managed to capture in over the last 5 years. It's more than the entire stablecoin supply on Hyperliquid, and it's 35 times the amount of stablecoin circulating supply on Ripple. And the stablecoin supply in Ethereum is now $160 billion. That's double where it was about 18 months ago. So you can see Ethereum is the winner here. And Ethereum has captured the majority of the real world assets. They're all taking place mostly on Ethereum. And SharpLink's chairman, Joe Lubin, agrees. He says Wall Street will stake ETH because they currently pay for their infrastructure, and Ethereum will replace much of the many siloed stacks they operate. Again, you can see a lot of this is taking place on Ethereum. And it's not just Wall Street. AI is also building products on the blockchain. In fact, we think one of the big story arcs is that it's not just Wall Street building itself onto the blockchain. It's really AI converging onto Ethereum. One of the co-founders of Ethereum actually said this. He thinks Ethereum could be the key to AI decentralization and actually act as a decentralized partner in solving current problems with AI intelligence platforms. So what does that mean? Well, that means that you're going to monetize data collection, royalties, loyalty programs, verify agentic AI, and proof of humanity. That's also taking place on Ethereum. So you can see the future is quite bright. And that's why, we come back to this analysis by ethdigitaloil.com that Ethereum's productive essentially is the underlying token that's going to power both Wall Street and AI. And keep in mind, as you worry about supply, Ethereum supply is growing below that of Bitcoin. And we also know as an asset class, if we think of Ethereum as digital oil, well, that's really what markets should be used to. From 1990 to 2018, ExxonMobil was one of the top 5 largest companies in the S&P 500, and it was always valued on a multiple of its price to oil reserves. So let's think about Ethereum's network value in that context. Well, here's Ethereum's price since 2018. And as you can see, there's 2 periods I'm shading here. These are called bases. And in Wyckoff's methodologies, they say the bigger the base, the bigger the breakout. And what they mean by that is that you're creating a lot of potential energy as a stock or a network asset bases, and then eventually leads to a breakout. Well, let's look at that breakout. In 2020, that breakout took place, and Ethereum went from $90 to $48.66, or 54 times increase. Well, the low point here in this base was $13.85. So with this breakout, we're expecting an upside move. Is it potentially 54x? I'm not sure, but that's what happened last time. Another way to think about Ethereum is the Ethereum to Bitcoin ratio. And in our view, the tailwinds I'm talking about argue for an all-time high in this ratio. The 8-year average Ethereum to Bitcoin ratio is 0.04790, and it's currently 0.04032, meaning we're below the long-term average. The all-time high in this ratio was 0.080727. Of course, it started off higher, but I'm talking about the 2021 all-time high. So we think that not only should Ethereum recover to the long-term average, it should probably get to the all-time high ratio and arguably exceed it as we start talking about Ethereum acting as the chain for both Wall Street to build its payment rails and the financial system, as well as AI. So let's think about what that means for price. So I have a grid here. On the left side is Bitcoin price levels, and then going across are various levels of the Ethereum to Bitcoin ratio. Our year-end target, this is from the Fundstrat side, for Bitcoin is $250,000. And if you look at the 8-year average, okay, then you can see the range of prices for Ethereum using this ratio and different levels of Bitcoin. And here's the 2021 high. And as you can see, at a $250,000 Bitcoin, you get to somewhere between $12,000 and $22,000 value per Ethereum token. But that's just a ratio recovery. If you look at the replacement cost of payment rails and the banking system, that gets you to an implied value of Ethereum of around 60,000. And that puts the ratio at roughly 0.2500 Ethereum to Bitcoin ratio. And as you can see, that's how you get to $62,000 per Ethereum token. So plenty of upside. I also asked Fundstrat's Mark Newton for his technical take on Ethereum, and he thinks Ethereum could reach 9,000 by early January. According to him, Ethereum could reach 9,000 in late January, but he also believes that in September, Ethereum could be set to reach somewhere between 5,500 or so. And now let's turn to digital asset treasury fundamentals. There's 5 ways for a digital asset treasury like Bitmine to increase its Ethereum held per share. It can issue stock at a premium to the dollar held of the ETH per share. It can do equity-linked securities to monetize volatility. It can use income from operations to buy more ETH. It can earn staking rewards and invest more in Ethereum. Or it can acquire digital asset treasuries trading close to NAV. And Ethereum treasury companies are crypto infrastructure businesses. First of all, Ethereum is a proof-of-stake blockchain. So Ethereum treasury companies secure the network. Ethereum generates a staking yield, and that's effectively revenues for Ethereum treasury companies. Staking secures the network. So these treasury companies are providing an important security operation. And eventually, stablecoin issuers and real-world assets will want to stake ETH. And again, as Joe Lubin points out, he believes that this is what Wall Street will ultimately do. And here's an example, or I think the best example of a successful crypto treasuries MicroStrategy, which has seen the stock price go from 13 to 335 over the last 5 years. And as you can see, 10 times of the return came from Bitcoin rise from 11,000 to 108,000. But 25 times of the total return of the stock price from 13 to 335 implies that the treasury function delivered roughly 15 times that return. Let's summarize with Bitmine financials and strategy. Now, Bitmine is the number 2 crypto treasury in the world with roughly 8.98 billion of Ethereum held. And as you can see, it trails only MicroStrategy, but it's larger than the 3rd, 4th, or 5th largest crypto treasuries by a significant margin. And Bitmine has grown its treasury holdings quite rapidly. This is MicroStrategy's accumulation of Bitcoin over the last 5 years. And you can see that Bitmine has raised 8.9 billion, something that took MicroStrategy over 1,200 days 5,500 or so. And now let's turn to digital asset treasury fundamentals. There's 5 ways for a digital asset treasury like Bitmine to increase its Ethereum held per share. It can issue stock at a premium to the dollar held of ETH per share. It can do equity-linked securities to monetize volatility. It can use income from operations to buy more ETH. It can earn staking rewards and invest more in Ethereum. Or it can acquire digital asset treasuries trading close to NAV. And Ethereum treasury companies are crypto infrastructure businesses. First of all, Ethereum is a proof-of-stake blockchain. So Ethereum treasury companies secure the network. Ethereum generates a staking yield, and that's effectively revenues for Ethereum treasury companies. Staking secures the network. So these treasury companies are providing an important security operation. And eventually, stablecoin issuers and real-world assets will want to stake ETH. And again, as Joe Lubin points out, he believes that this is what Wall Street will ultimately do. And here's an example, or I think the best example of a successful crypto treasuries MicroStrategy, which has seen the stock price go from 13 to 335 over the last 5 years. And as you can see, 10 times of the return came from Bitcoin's rise from 11,000 to 108,000. But 25 times of the total return of the stock price from 13 to 335 implies that the treasury function delivered roughly 15 times that return. Let's summarize with Bitmine financials and strategy. Now, Bitmine is the number 2 crypto treasury in the world with roughly 8.98 billion of Ethereum held. And as you can see, it trails only MicroStrategy, but it's larger than the 3rd, 4th, or 5th largest crypto treasuries by a significant margin. And Bitmine has grown its treasury holdings quite rapidly. This is MicroStrategy's accumulation of Bitcoin over the last 5 years. And you can see that Bitmine has raised 8.9 billion, something that took MicroStrategy over 1,200 days to reach. And let's not forget the roadmap ahead, that Bitmine has many phases to its operations, but ultimately the focus is on getting to 5% of the Ethereum network. Thanks for listening, and I'll speak to you soon. Hi there, my name is Tom Lee. I'm the newly appointed chairman of Bitmine, ticker BMNR. And I want to welcome you to the launch of a monthly video series called The Chairman's Message. The purpose of this Chairman's Message is to keep you abreast of all the updates of Bitmine as it builds the world's premier treasury strategy and what we call the alchemy of 5% once we reach 5% share of all Ethereum tokens. There's some disclaimers I want to highlight, safe harbor and risks. But let's start with the exponential growth story of Bitmine itself. It begins after July 8th when the $250 million private placement was closed, and that's when I joined as chairman.
Hello,
Hi there, my name is Tom Lee. I'm the newly appointed chairman of Bitmine.
If you were watching the stock or crypto market during the past few weeks, you would have came across this name, Bitmine companies. What that means is they're accumulating Ethereum, so they're Ethereum treasury companies. Similar to what Michael Saylor is doing with strategy, accumulating Bitcoin. They're taking the playbook right out from there. And yes, BMNR right now is number 1. They've accumulated almost 1 million Ether. As of today, it's worth $3 billion. So during the next few minutes, I just wanted to spend a couple of moments talking about some of those fundamental things about Ethereum that makes Tom Lee believe that Ethereum is having its 2017 moment, just like what he believes that Bitcoin in 2017 was trading at $1,000 and now is about 120,000. So that's 120x from where they were. And Tom Lee thinks this is Ethereum's moment, and Ethereum is the best macro trade during the next decade. You may ask yourself, your fundamental belief is in ETH. Why do you not just purchase ETH straight out? So right now we have 3 options. So your first option is to purchase ETH on-chain, store it yourself or at a centralized exchange like Binance or Coinbase. Your second option now is actually buying ETFs. So there's a lot of ETH ETFs, and especially BlackRock being the biggest ETF. If you look right over here under ETHA or iShares Ethereum's ETF by BlackRock, there's over $10 billion in this ETF. And of course, the money continues to flow into the ETF like BlackRock and others. So that's the second option, is just buying the ETF. Now, why would some people do that? Well, some people people don't want to store it on their own private keys. They don't want to use their own wallets. They simply hand over the custodian to BlackRock. And then BlackRock buys the ETF and stores it for them. So that saves a lot of people headaches. And then for retirement accounts, tax-free saving accounts, a lot of people can access the ETF way easier than going on-chain. So that's option number 2. So the third option is by purchasing an Ethereum treasury company. Just like people are purchasing Strategy rather than buying their own Bitcoin or a Bitcoin ETF by BlackRock. Now, why would you want to purchase something like BitMine or Strategy? The key behind it is they're actually increasing your value per share. So it's not a static company that's just buying ETH and storing it in one place. What they're actually trying to do is raising capital to buy more ETH, but every single time that they're purchasing, it should make your share more valuable by adding on more ETH. So you're actually buying the current ETH per share that they're buying, and then also the future ETH per share. So increasing that value, that asset's value over time. And this point couldn't be articulated any more clearly by Tom when he posted this online. So notice right over here, MicroStrategy or Strategy, when they started out their treasury back in 2020, Bitcoin was roughly trading at 11,000. Now, over that same period to now, over those 5 years, MicroStrategy is now trading at roughly 117, 120,000. So that's a 10.5x if you just had held Bitcoin by yourself. Now, because MicroStrategy, if you look at its share price, it's actually appreciated 35 times. So 35x had you buy it MSTR shares from that day on towards today. So there's a difference of 25x between this 10x and this 35x. That's the 25x. That's the premium value that Strategy is bringing back. So that's what Tom Lee is arguing. He's arguing that by buying treasury companies, you could see that over the long term, you do significantly better. Now, of course, that comes down to a lot of factors, which we won't get into today. A lot of financial engineering by Michael Saylor and Strategy. They're doing a lot of good things. And then also on the volatility of the asset in terms of Bitcoin or Ethereum. So just to continue on with the story, Tom did post this last week. So it's about 1 week old. I will update the new numbers today for you, so don't worry. So they started out as a Bitcoin mining company, and then when they raised that money, that $250 million and pivoted, that's when the stock rocketed up. And then by last week, they've already accumulated $2.7 billion worth of ETH. And of course, Tom is not doing this in a vacuum. He's got a lot of big investors, and we'll talk about them later on. But just a quick snapshot right over here, you can see some of the big name mosaics. That's Peter Thiel's company, Pantera, Digital Galaxy, and then Kraken, the major exchange. So, and then of course, Tom Lee, he's the Michael Saylor for Ethereum, okay? So Bitcoin's got Michael Saylor, Ethereum's got Tom Lee. So if you don't know who Tom is, he's been on Wall Street for 20 years, but more than that, Tom is one of the most articulate and clear person. He's able to explain this to everyday human beings and connect with people on the street and not just with Wall Street. But the key thing with Tom, what I like about him is that he's been more right than wrong on big things. If you look back at this clip back in 2017, 2019.
Right now, if you actually think it's undervalued by that extent?
Well, we think the best approach for most people is just to put 1% or 2%.
Are you saying that? I get that if you're somebody who's got a lot of assets, I still think it's crazy. But for a retail investor, somebody who's saving for retirement and putting that aside, that seems crazy to me.
Well, it's basically the idea that you can afford to lose 1% if that's 1% of your portfolio.
That's crazy. You might as well throw it away on high fees to an investor, to an average. Like this, you're taking a flyer on that. You don't know where it's going to go or what's going to happen.
Well, in a way, that's right, Becky. That for the majority of people, it's 1% is like a small risk bet. But Bitcoin makes all of its gains in 10 days in a year. I think this is an example that if you exclude the 10 best days, Bitcoin loses 25% a year. So you got to essentially hold it or hodl it, as they say.
We need a training manual for the new hire, ASAP.
Hey, I'm gonna be home late again. Yeah.
Glad I caught you before
Hey,
you
need the
left.
training manuals?
Yeah.
To really capture the gains.
He was trying to tell people to start allocating. So he really called the bottom of Bitcoin and trying to help other people in terms of adding Bitcoin to their portfolio. So here's the earliest on Wall Street to recognize this. So if you watch all of Tom's talk, he really mentions 2 points. He says that this is Ethereum's 2017 moment, just like the way Bitcoin had it in 2017. What he means by that was Bitcoin was only $1,000 and now at 120x trading all the way up to 120,000. In 2017, what happened was Wall Street recognized that Bitcoin is the digital gold. He's saying that's the same phenomenon for Ethereum today because Ethereum's being adopted by Wall Street. Now, if you look at what's happening, he calls it the ChatGPT moment for Ethereum. So big banks like Goldman Sachs, JP Morgan, they're all working on Ethereum. Also, if you look at the recent legislation, President Trump just signed into law the Genius Act, which opens the floodgates for stablecoins into the market, right? And people like Walmart, Amazon, they're exploring their own stablecoin. And then things like Robinhood, right? Robinhood's one of the most popular trading platforms for retail clients. They are tokenizing everything. So as you can see, all of this rush towards Ethereum, there's going to be a lot of adoption and utilization. This is the ChatGPT moment that Tom is talking about. Now, another key thing that he brought up with this slide in terms of what BitMine can do versus something like Strategy, if you look back in time, the first sort of 180 days, MicroStrategy started out raising $247 million. That was their first Bitcoin purchase. Within that 150 days, right over here, okay, MicroStrategy raised $2.7 billion. They've actually purchased Bitcoin up to $2.7 billion, whereas BitMine, starting out in the same time period, okay, that same time period, they started out with $265 million, but within 18 days, they've actually ran up to $2.7 billion, roughly compared to MicroStrategy doing it over 150 days, okay? So that's how fast BitMine is accumulating Ethereum versus Strategy accumulating Bitcoin in its early stages. So with the fundamentals out of the way, let's get into the details to help us understand how to evaluate these treasury companies. Now, there's two terms that I want you to remember. We're gonna go through them one by one with examples, and then we're gonna look at models in order for us to better understand the valuation of these companies. So two things I want you to keep in mind. One is the NAV, the net asset value of what that company is worth. The other one is the MNAV, okay? That modified NAV or that multiple NAV. That's basically the market adjusted value of that treasury company. So in this case, it's BMNR. In strategy case, that's MicroStrategy's asset per share. So this is basically, in plain English, the premium that the market is assigning to the assets that this company holds, okay? So as we go along, I just want you to remember these. So the first thing is the net asset value. So how do you calculate that? That's based on your total assets minus your total liabilities over all of your outstanding shares. So they're fully diluted shares, okay? So remember that. Total assets minus total liabilities over the outstanding share. So coming back to here on July 27th, if you look at BitMine, all of its asset, well, how many Ethereum did it hold? It held 600,000. So these are actual number. At that time, the spot price, which is the price that they're trading at, was 3,800. That's where you get your $2.3 billion right over here. That's what it's worth. They held a bit of Bitcoin, 192 Bitcoin. That works out to be roughly 23 million. And then they had cash in hand, about 370 million. So if you add all this up, this is the $2.687 billion or $2.7 billion. This is the fully diluted shares. So if we take all of its assets, and we minus liabilities. In this case, the liabilities are negligible, they're zero. Divided by the 117 million shares, that's where you get the 22.8485 or the $23 if we round this. This is its net asset value per share. So that's what it's holding on to, okay? So if we go right over here, we take a look at this, we can see that from July the 8th, this is when Tom posted it, when they raised that $260 million, okay? Fully diluted shares, so they were at 67 million, and they added on another 51 million in order to go from this value to this value. It actually is 2.7 billion. So the value that they created was they had only $4 of net asset value. They're actually creating $19. So an additional value. That's where we get to the $23 net asset value. So keep this in mind, okay? So keep this in mind. Now I'm going to take you onto my spreadsheet so this way we can understand it a little bit easier. So on here, I just have the same information from July 27th. You can see right over here how we calculate the net asset value. I'm just using this calculator. And if some of you find this useful, I'll link it below so that you could use it for your own spreadsheet. You can play around with it to see what the asset's value would be and to determine your own valuation of the company. You can see right over here how we derive this 2.3 billion is from the 600,000, that's the ETH right over here, times by the spot price. So you can change the spot price. ETH is trading at 3,600, 3,700, 3,500, whatever it is. You can change it on here. That's where we get that value from. Here's their BTC. So remember, they own a bit of BTC, which is 23 million. And then finally, their cash on hand. So this is what I have for their cash divided by the number of shares. So remember on the last slide, it was about 117 million shares. If you take that divided by here, that's where you get your 22.85 or $23 if we round it up. So this is what they're holding. This is what the market is valuing their net asset value on their balance sheet. Now, if we go and we apply this MNAV, okay, so remember the MNAV is the premium that the market is assigning or willing to buy the shares at, okay, based on the company. So if you take that MNAV and you multiply it by this 2285, that's the NAV times the MNAV. The MNAV, I've assigned it a value of 1.5, okay? Now, why did I assign it a value of 1.5? If you look at MicroStrategy, we could see that the MNAV for MicroStrategy right over here is 1.7. Yes, BitMine is not MicroStrategy, but it's using the exact playbook that Saylor is using for strategy, okay? So strategy gets a 1.7 NAV, sometimes even higher than that, sometimes pushing up to 2. And if you look at companies like MetaPlanet, at some point the NAV was up to 4 to 5, okay? So this is the MNAV that they are using. So I'm assigning a 1.5, but just know that Tom is accumulating ETH much faster than Michael Saylor was accumulating Bitcoin at. So coming back to here, you could see that by taking this $22.85 or $23, multiplying it by 1.5, that's the MNAV, that's the premium that we're assigning it. That's where you get a market share price, okay? So every single day, the market trades at a different share price, right? People buy and sell these things. So you'll see these numbers change, but it gives you an idea where it should be priced at. So if the NAV is at $23, and if you assign a 1.5 towards that, you should get $35, $36, $37, whatever it is that day. And then on August the 4th, August the 5th, you could see that BitMine updated their treasury, right? They said they hit 2 milestones. Number one is they've actually bought 833,000 Ethereum, which is valued roughly at 2.95 billion as that price. And then Bill Miller 3 announced that he was joining BitMine. And I'll talk about the shareholders a little bit later on, but let's focus on this value. So what happened was the treasury increased that value. So if we look at the data and we plug it in, the new ETH holdings is about 833,137 ETH. The new diluted shares is 131 million shares. So we have to change that. So that's why this number changed. If you look right over here, that 833,137, if you multiply it by the spot price. Now you can choose the spot price wherever you want. So if you chose, 3,600, you multiply that by the 833,000. This is where you get your $3 billion of value. Now the Bitcoin is still the same. They held 23 million. And then of course their cash in hand. If you kept it the same and you assume no changes, that's what you would get in terms of their NAV value. Now, of course, these numbers are going to change, but going forward, what I want to do is I want to omit this and I want to omit that. I want to value them based on just their ETH holdings. Okay. So that would be their NAV per share. Now, if you go down and you do that by 1.5, okay, 1.5, if you assigned a 1.5,
At StoneX, we don't just trade markets, we live them every day. Connection isn't just something we provide, it's who we are. StoneX, connecting you to markets.
Hi, I'm Brett.
And I'm Jonathan.
This is Darla.
And this is Buddy.
We're the founders of the Farmer's Dog.
We've made an entirely...
and you multiply that, that's where I get this from, okay? So I get this D4, which is this $25.89 multiplied by 1.5. It should be trading at $38.83. And this is pretty accurate because if I look at today's share price, so you can see that as of August the 6th, after the bell closed, it's trading at roughly $38.55. Of course, it's not going to be accurate for dollar for cents, but it gives you an idea, a ballpark, a range where the shares should be trading at. Now, before I get back to my spreadsheet model, where does Tom think Ethereum's going to go? We all know he's bullish on Ethereum. Personally, myself, I think ETH is going to tap out at 10, 15Ks towards the end of this cycle. But if you look right over here, where Tom posts in terms of near term, where it was 1 year ago, using a ETH to BTC ratio of 0.05, he believes that ETH should be at least 5,800 today, but it's currently at 3,600. He also predicts that ETH will likely go to 10, 20,000. So if you look back at that chart, he posted this just August the 1st, so a couple of days ago. But today on CNBC, he went on and he talked about ETH being at least 16,000 and then all the way up into 30,000 and then throwing out figures like 300,000. But let's keep it simple like this, ETH going anywhere between 10 and 20,000. So if we get back to this model to make things more simple, we're only going to look at the ETH holdings, like I said. Forget about the BTC holding, the cash for a moment. So if you just take a look at their ETH today, as of August 5th, August 6th, they're holding 833,000. I'm going to keep this the same, okay? The outstanding shares, I'm going to keep the same as well. So the NAV, the MNAV right over here, we're going to keep at 1.5, okay? So the only thing that's changing right over here to target price is ETH. So right now in August, it's roughly 3,700. You can change it whatever you want. If you just take 3,650 as a unit price and you go over, the NAV is 23.21, you arrive at roughly $35 a share, which is what the market is trading for actually today. Now, by December, in the next several months, in the next 4 months, let's say ETH goes to 8,000, still below that 10,000 target that Tom is putting on ETH, 10 to 15K. If you kept everything else the same, of course, the treasury value balloons, 6.6, 6.7 billion. And if you take that same MNAV of 1.5, now the net asset value is already $51 and you multiply it by 1.5, if nothing changed, even at $8,000, this is at $76 a share. Same thing if it went to 10,000, let's say in early January, February of 2026, we kept everything the same. This is a $95. And then finally, if it tops out my top out price, Tom thinks it can possibly go to 20, 30K, okay? At 15,000, we kept everything the same. It should be trading at $143 a share. So right now, people are arguing over buying it at $30, $31, $35, $37. None of it will matter if ETH goes towards where it's supposed to be. And the underlying thesis here is that ETH is going to get adopted by the, Wall Street, the financial market, stablecoins are going to come in. All of those things are going to happen. So ETH still has to do well. But you can see it doesn't make any difference whether you buy it at $38 versus $34 today, okay? Now, let's make the model a bit more interesting. If we change the MNAV, okay, so instead of 1.5, we went to 1.7. So we're giving us an MSTR, so MicroStrategy or Strategies MNAV, okay? What does it do to the price? Well, if we kept everything else the same, 3,600, 8,000, 10,000, 15,000, notice the share price bounced to $39.86 108 at 10,000, and then 160 if we just increase the MNAV alone, that 1.7, which is what they're actually trading for. And we come back right over here and we add in that additional complexity. So remember, getting to 1.5 million ETH is only about 25% of BitMine's goals, right? They want to get to 6 million ETH. So this is kind of sandbagging it, okay? This is kind of keeping the numbers low and realistic. So going from here in August to December, you're increasing by 25% of the ETH that they're accumulating. Same thing from December to sort of early January, 50% of the ETH compared to what they have today. And then finally, you are doubling the amount of ETH in 2026 of what they have today, which I have full confidence that they're going to way outdo this number, okay? So if you just increase that number in terms of ETH, now remember that the share price is going up as well. So as the share prices go up, right, that ETH is actually becoming bigger. So the goal is to get to that, okay? So at some point, if ETH balloons to 15,000, even at 1.6 million ETH, that would be a $25 billion valued company, okay? So keep that in mind. Now, in terms of the shares, nobody can guess this in terms of the number of shares, whether they're using, convertible bonds or preferred shares, different ways of raising capital so that they do not dilute their shareholders. I don't pretend to be Tom. I don't know what BitMine is doing, okay? So what I did was I just simply increase by 25% in terms of the shares, 50% in terms of number of shares that are out there compared to what we have here, and then fully diluting everybody by 100% instead of 131 million to 262 million to keep it realistic. Now, like I said, these are just numbers that we're putting in there. Of course, it could be a lot more, it could be a lot less, but the goal is to increase your value of your ETH, okay? So if you kept the MNAV the same and you look at the share price, right? Even at a conservative $8,000 right over here, you should end up with an $86 per share, okay? 86 bucks per share using a 1.7 NAV if they get to about 8,000, okay? So if they get to 15,000, of course, this number significantly changes, right? You need more capital in order to buy more, but if this value just increases, let's say right over here in December.
There might have been two.
So that was a pretty good video there. I kind of want to go over these guys. They're actually pretty awesome. They are the Bankless. They talk about, a lot about cryptocurrencies, crypto companies, and so here they're covering Tom Lee. Tom Lee came in for an interview. I thought this was a good interview. We'll just check it out real quick.
Treasury. That was announced in May. So we're behind, we came after SharpLink. But I think that, Ethereum itself makes a lot of sense to do as a treasury play because one, if you're positive on ETH itself, then that's the reason to do a treasury strategy, especially over an ETF, because the functions of a treasury strategy let you stack more ETH. But the second is ETH, I think, actually, that because of staking and the proof of stake, that these treasury companies are essentially infrastructure companies, and in exchange, you're getting paid, a yield for native staking, and that makes them into real businesses. Like for instance, over $3 billion worth of ETH that we hold today, you would earn native staking over 3%. And that's essentially GAAP net income. But the third reason, of course, is that, it's important to create scarcity. I think that the story that we have at BitMine is one of scarcity because we have a very clear strategy of trying to acquire 5% of ETH and we have a pristine balance sheet. I think that's a big advantage. And the stock is super liquid. It trades $1.6 billion a day, which makes it the 42nd most liquid stock in the U.S. stock market today. Actually, Uber, we trade about the same as Uber every day. And I'm just going to check Uber's market cap, but I think, BitMine's, about 4 billion and Uber's market cap is 184 billion. So we trade as much as Uber despite a 4 billion market cap versus 183 billion.
Hey, Tom, let's talk about that 5% number because I've heard you say that before. And we're just like adding up some numbers here. 5% of total ETH supply. So that'd be about 6 million or so ETH.
Yes.
You're at 833,000 now, but have gotten to that number in like 4 weeks. So you're moving very, very fast there. Are you serious about 5% of all ETH? Because from my recollection, MicroStrategy, they've been at this for a while, since 2020. I believe MicroStrategy is up to like 3% of Bitcoin or so. And they've been dollar cost averaging in over time. 5% of all Ether, I guess at the current market price is what, 20 billion or so. But I assume you can't get there overnight, especially at these prices. How in the world do you get to 5%? And are you serious about that number? Or is 5% kind of a placeholder? It's just kind of like, yeah, we'd like to someday 5%. That sounds good. Or are you serious about it? And do you have an execution plan to get to that 5%? And if so, what does that look like?
Well, MicroStrategy is 3.2% of the network circulating supply right now. And, but, MicroStrategy wants to get to at least 1 million Bitcoin, which is about 5%.
And keep in mind that once MicroStrategy has 1 million Bitcoin, they have a sovereign put. They are strategically important to the Bitcoin ecosystem. I mean, if the US wants to create a strategic Bitcoin reserve, it's probably difficult for the US to buy 1 million Bitcoin in the open market, because as soon as they announce it, sellers are going to shrink and Bitcoin could go to $1 million right away. So MicroStrategy might be an easier way for someone to get to 1 million Bitcoin. So I call that a sovereign put. MicroStrategy's achieved the 3% in 5 years. So they were buying basically 16 cents worth of Bitcoin a day, every day for the last 5 years. Bitmine if you look at it from inception to now, has added about 80 cents to $1 per day in Ethereum. So it's about 12 times faster than MicroStrategy. So we would be on a path to get to 5%, presumably like at 12 times the speed of MicroStrategy. But it makes sense because, we would be a benevolent entity in the sense that we are doing everything 100% compliant with what is the idea of a legally compliant. Ethereum is a legally compliant blockchain, and everything that Bitmine is doing is keeping every single piece of the operations in the United States. So it is very compliant to what Wall Street and the US government would want to see in someone who's staking a lot of ETH. And equally important, ETH itself is going to be really where so much of Wall Street financializes on the blockchain. So eventually, I think someone on Twitter made the point that staking ETH for Wall Street is like gamers buying NVIDIA, that you would have done better to buy NVIDIA as well as be a gamer or be a gaming company. But because of, really how blockchains work, it is actually that exact idea that Wall Street is, if they're going to be tokenizing real world assets from money markets to dollars to stocks, that they're going to want to own ETH itself, but then they want whoever's staking it to actually be an entity that is really trying to further the goals of Ethereum. So I think we really serve an important purpose by staking ETH,
Tom, if you say you're moving at the current pace 12x faster than MicroStrategy, I mean, that puts you to 5%. If you continue that pace in about like 1 to 2 years, basically, which would be breakneck speed, do you think a same kind of sovereign put strategy exists for Ether, the asset, as it does for Bitcoin? I've heard you say that all of the commercial banks, the JP Morgans of the world, coming on chain, Genius Bill, stablecoin legislation. This is effectively treasuries and the U.S. central bank coming on chain with their dollars. Ethereum is, of course, leading the pack there. Is there a similar sovereign put type option where the U.S. government or some other sovereign nation, I guess you're legally compliant in the U.S., so you'd hope it would be the U.S. government, comes to you one day and says, "Hi, Tom, Bitmine, we noticed, has a lot of ETH. We want to buy ETH for the U.S. Treasury, U.S. central bank, put it on our balance sheet. And we know you have a lot. Can we do an OTC deal?" Do you think that's a possibility here?
Look, I think everything you just said is actually rational and makes sense. But let's say that our goal isn't to have a put. Like if you just fast forward and Wall Street, right? So Genius Act, SEC wants to move the financial system onto the blockchain. And Ethereum is the largest blockchain, but it's also compliant with US laws. It's a legally recognized blockchain. But this blockchain, of course, can be used by other countries and other, nations. The US obviously wants to strengthen the US position and dominance on this blockchain. And of course, keep in mind that there's not just one storyline here coming onto Ethereum. It's also AI, right? If you're going to tokenize, whether it's robots or other things, you want a blockchain that also, again, can be secured. So tech and Wall Street are converging onto Ethereum. Does Goldman Sachs and JP Morgan want Ethereum to be held in like millions of different wallets? Not that they're trying to centralize it, but they want to make sure that the staking is done in a compliant way. And not everybody is going to choose to do that. But that's what we said from the beginning, that the idea is that Bitmine has a pristine balance sheet, super clean, no exotic capital structure, and everything that is being done. And we haven't announced our staking solution, but we're taking our time because, first of all, $3 billion of ETH, it's a big decision, but it's also going to be completely compliant with GAAP and actually how the US would want that to be staked. So I think it's a very thoughtful approach we're taking. But yes, I mean, everything you just said, like, let's say, because I don't disagree, and it just shows you Ethereum treasury companies are critical infrastructure. It's not just a treasury play. And in exchange for that, you're earning a staking yield at a minimum, but they could be earning other ways of generating income. So I think you're highlighting that these Ethereum treasuries aren't just like an alternative to an ETH ETF. They are playing a really important role in the ecosystem.
Right. One thing I can't figure out, Tom, and I think some ETH bulls are with me on this, is how in the world ETH is still trading under 4K when you just talked about in a month's time you now have 3 billion in ETH in your in the Bitcoin treasury. So 3 billion in ETH purchases. How does that not move ETH price like 4K and above? Like, how are you still getting a bid at 3,500 ETH? Where's all this ETH coming from, and how is it not moving our price here?
Well, we've learned a lot. I don't really want to say too much because, as you can imagine, we've probably been one of the largest buyers of ETH.
So practically they don't it's a strategy. You don't want to tell everybody how you purchase ETH, but what they end up doing, I think the way they're going to grow their ETH accumulation is through this process right here. They're going to go and buy companies that actually provide that ETH, that actually have ETH. For example, you have a company like ETHZilla that has over 100,000 Ethereum. Well, that already exists. It's already been purchased. So all they're going to do is they're just going to go buy it from some company. And so this is how they're going to slowly, continuously grow their Ethereum holding. They can also invest in companies that currently have some kind of structure, business structure that is Ethereum. That's going to be one way they can grow the number of shares. But overall, it's obviously a strategy, and you don't want to just tell everybody how you do it.
And so we've learned a lot. And I would say in the short term, where fair value for Ethereum does not play into what ETH does short term. I mean, look at it. Last week, it got to 3,300 on because there are folks who have liquidation levels, or they're doing pair trades, or people think Ethereum's a dead chain, so they're betting on another chain and trying to force levels of liquidation. I think that that's the dynamic near term, but wasn't that Bitcoin at $1,000 in 2017? Like, actually, if people go back to 2017, because I think Ethereum is having its Bitcoin 2017 moment this year, where Wall Street is finally getting behind ETH. You know, Bitcoin was 1,000 in the early part of 2017, and it was until August, and then it went straight up. I mean, literally went straight up.
We've definitely haven't seen this level of Wall Street interest in ETH, the asset, and Ethereum, the network, in like 4 or 5 years now. And I mean, we're seeing the appetite from Wall Street coming in all different corners of the Ethereum ecosystem. When people ask you about why buy an ETH treasury company over a Bitcoin treasury company if they're shopping around, because there are treasury company options out there. There's been MicroStrategy. There's not only just MicroStrategy for Bitcoin. There's others, and then, like as you alluded to, there's like a Hype treasury company. There's an Athena treasury company. So when you explain why specifically ETH, like what is resonant about Ether, the asset, and the treasury company model over something like Bitcoin or any other alternative treasury company?
Well, first, I'm a big fan of Bitcoin. I think Bitcoin is the way, and our work on the Fundstrat side shows Bitcoin can get to the $1.5 million per coin. So Bitcoin still has a huge story ahead. Yeah, but Bitcoin and Ethereum operate in different parts of how the world is financializing. And that's the principal difference to me, because Ethereum represents the world financializing onto the blockchain, which is not Bitcoin's goal, and the AI world, creating basically a digitally native way to bridge the real world and digital security. So that's, to me, why someone wants to own Ethereum treasuries, because I would buy MicroStrategy if I was looking at this. And by the way, it is a granny shot in the Fundstrat ETF. But the reason is that MicroStrategy is growing your Bitcoin holdings every day. So you're going to outperform Bitcoin. Ethereum treasuries are really the only way for a US equity investor to get exposure to Ethereum, unless they're buying ETH directly or an ETH ETF. But if you're an institution and this is one of the biggest themes, I don't think they're going to just say, well, in my fund, my $50 billion large cap fund, Ethereum's the biggest trade, so I'll buy JP Morgan. They might, but they're better off saying, how can I be directly exposed to Ethereum? And they can't really buy an Ethereum ETF because that's not within the parameters of their fund. So I think, to me, the US equity market professional investor looks at Ethereum treasuries as really the only way to get exposure to ETH as a macro trade. And that's why, you've seen like the Kathy Woods make a big investment in BitMine, and Bill Miller today we announced that he made a major investment last week into BitMine. So they're institutional investors. They're both of those folks are OGs in crypto. Realize this is the best way to have macro exposure to Ethereum.
In addition to just like the MNAV premium, which has mostly been MicroStrategy's strategy for bootstrapping itself into buying more Bitcoin and accumulating more Bitcoin, Ether treasury companies have a bit of extra tools in their tool belt simply by nature of what Ethereum is, right? Ethereum has like an on-chain DeFi ecosystem that Ethereum treasury companies can actually leverage. So my question to you is, what's your strategy for accumulating more ETH using the additional tools at your disposal? Because all treasury companies are leveraging the MNAV premium in order to accumulate more respective assets under their balance sheet. But there's other strategies beyond just kind of like extracting the premium to accumulate more Ether. What else? What other strategies? Ignoring the MNAV premium, how else do you get Ether on your guys' balance sheet?
Yeah, David, of course, you're asking a great question, and I have many answers, of which I can't really share most of them, because whatever strategy we pursue, is some of this is very proprietary. But I would say investors shouldn't oversimplify their thinking around treasuries, because we've become the third largest crypto treasury in the world after Mara blockchain and MicroStrategy. So we own more crypto than Meta Planet. And so then you realize that companies that are of significant size and liquidity don't simply have to be doing like singular things, so that's probably the difference.
Tom, why does an MNAV?
I just got to point this out. I'm just looking at look at the difference in market cap between Ethereum and Bitcoin. Bitcoin is at 2.2 billion. ETH is about $500 million. And ETH, like Tom even said in the video, ETH hasn't had that Bitcoin season where institutional investors are looking at it and actually seeing the value. And so I think when they see that, I think we're going to see Ethereum really catch up to the Bitcoin. It's not going to be the same thing as Bitcoin market cap, obviously. But I think in the long term, because this is a utility that every single company is going to, well, a lot of companies that who choose to go onto the blockchain are going to have to use. Because of that, it's going to just continue to gain value. More ETH is going to get burnt. More fees are going to have to get paid in Ethereum. And at the end of the day, the value per ETH is going to dollar value per ETH is going to just keep going up. And unless the world decides, you know what, Bitcoin, because of its limited number of shares out there, that we're going to just buy it because it's limited supply, and they try to institutions and just countries, sovereign nations decide to buy and make Bitcoin a treasury, Ethereum is going to catch up pretty fast to the market cap. It's not going to be the same. I think all I know is that we're seeing $500 million in market cap for a utility asset, a ledger, like all in one. Nothing like Ethereum exists. Bitcoin is nothing like Ethereum. So I think if Ethereum does have, which we're just waiting for Ethereum to have that Bitcoin moment, and if that is that year,
of premium even exist? Can you talk about this? Because I've heard some investors talk about this, and their basic view is the MNAV premium should kind of collapse somewhere around 1, maybe a bit above 1. Of course, in bear markets, it could trade under 1. But why is there an MNAV premium in the first place for any crypto treasury company?
Yeah, can I walk you through that?
Please.
Okay. Because it's a very good question. Okay. I want to start with a numerical thing and then give you the non-numerical. Let's say that someone buys us, and BitMine is very strict on cost structure. So it's basically with $3 billion of Ethereum, let's say, you're like, okay, you're just an ETF. So let's say you put it at 1 times NAV, okay? But then there's a native yield of 3%. And let's say you pay that out as net income. But let's say you go, oh, well, let's just give it a money market multiple. So 5%, you gross it up. So it's a 20 times multiple of your 3%. Okay. That's adding 0.6 to your NAV because of the what you earn on a yield. Does that make sense?
So we're already at 1.6 just
1.6,
because of ETH staking yield,
Correct.
basically.
Then the third, there's two other components to value. You have to account for velocity, because when we started the ETH strategy on July 8th, there was only $4 of Ethereum held per share. And now when we announced on July 27th, there was $23 of Ethereum held per share. And it's much higher today. We haven't disclosed it, but it's higher. So it's grown by $19 a share in 20 days, roughly. That's velocity. You have to give a velocity, because when you do NAV, the NAV is growing. So you have to give a multiple to that NAV growing. MicroStrategy is getting a 0.7 for adding 16 cents of Bitcoin a day, but we're doing it 12 times faster. So if you did the theoretical math, we should be getting more than, it should be 0.6, which is MicroStrategy's premium, but 12 times faster times 12. Now, I'm not saying that'll be what's priced, but think about it, that's like 6 points of NAV. So that's just velocity. And then there's liquidity, because, after MicroStrategy trades about $3 billion of trading a day, we're the second most liquid crypto treasury out there, because we trade 1.6 billion a day. Like Metaplanet, for instance, and I'm a big fan of what Metaplanet's doing, but they're trading like, I don't know, $50 million a day. So we have like a quantum log function of liquidity. So that should be worth a premium too. So I think like BitMine just should be 1 times plus the yield gives you 0.6, so 1.6. And then how much value do you give for the velocity? And we know MicroStrategy is getting 0.6 for adding 13 cents a day, and we're 12 times faster. And then what's the premium you should pay for liquidity? Because liquidity is how you can issue other instruments at lower cost.
So there's a liquidity premium to this product.
And a velocity premium.
Yeah, the liquidity premium you get by being kind of the biggest and baddest and kind of like deepest, right? But the velocity premium, which is kind of interesting, let's dig into that, because there's the velocity of, in the first month, you've moved 12x the speed of MicroStrategy. The question, though, is that sustainable for the next, let's say 11 months, right? For an entire year. Talk about that. So how are you able to get that level of ETH velocity in terms of your purchasing, and can that level actually be maintained?
Well, that's a function of liquidity, right? So it's liquidity and velocity are like two aspects of the same characteristic. We're able to have a lot of velocity because of our liquidity. I'll give you an example. So today we trade, like as of 2 p.m., we've traded $800 million of dollar traded volume today. And MicroStrategy has traded, 3 billion. So they've gotten a lot. But Ether Machine, which is the third largest holder of Ethereum, traded $7 million today. So we traded 100 times the volume of Ether Machine. And then like BTBT, I believe they're the fourth largest holder. They traded $49 million today. So you can see there's a huge difference in liquidity, which affects your velocity, because everything that you do to get velocity requires your stock to be super liquid.
Let me ask the same question for velocity, though. So if you're saying, hey, the velocity comes from liquidity, and the question is, where's the liquidity come from? So like, how do you get more of that?
Yeah. So I think, well, that's probably the synergy of the team, because it's myself, as chairman, but our lead investor in BitMine from the private investment was Mosaics, and they're a really well-known, very smart macro hedge fund. But that's how we were able to attract folks like Founders Fund, and Stan Druckenmiller was revealed in the registration statement as a holder, and of course the ARCs and the Bill Millers. I mean, you have literally the biggest blue chip names in traditional markets and VC backing BitMine. That's one element, is that it's obviously the people believe the vision. The second is that I've been a long-time proponent of crypto, and the convergence. And
I just have to add that the reality, I think, is that after a certain point, once the business strategy, once what BMNR is doing is actually proved that they can actually drive that 5% of total supply in BMNR shares, I think they're gonna automatically be like an ad that the fact that they're doing that is going to be like a marketing thing, which means other companies, large institutional investors, are going to start looking at what this company does. So I think the closer they get to that 5%, the more organically that they're going to be able to find investors because they're gonna take them seriously. And the fact that they're already at 2%, they're at about 11 billion dollars between crypto and assets. I think they're good, and they did all this within a year. Actually, no, within like 3 months, they were able to have about 2% of total supply. And how many months do they need to have the total supply, the 5% supply that they're trying to grow? I don't know. I don't think it's gonna take that much longer. Especially how aggressively they're going, and the fact that they have ARK, Founders Fund, Bill Miller. Some of these companies are not as large, but like these are well-known investors, and they have really good connections out in the investment world. So that itself is going to be a great ad for a company like BMNR. In the same way, like not a lot of people knew about MicroStrategy at all until they actually started executing. They're actually buying Bitcoin and they started accumulating, and people took them seriously. And now they're a $90 billion treasury. So,
and now, we really argued forcefully in 2017 that Wall Street would care about Bitcoin starting in 2017. That was really the year that it became an institutional product, right? And ownership grew from there. Ethereum is experiencing its 2017 moment right now. And that's, I think that is logical to the folks that know us. And I think that that's helping support what the Ethereum treasuries are all trying to accomplish. Of course, I'm really supportive of like SharpLink and what they're trying to do, and Andrew Keys, because we're all doing the same thing. We're trying to stake Ethereum to make it a secure US blockchain. I mean, we're all really working together towards the same goal.
In the Wild West of DeFi, stability and innovation are everything, which is why you should check out Frax Finance, the protocol revolutionizing stablecoins, DeFi, and roll-ups. The core of Frax Finance is Frax USD, which is backed by BlackRock's institutional BUIDL fund. Frax design.
All right, I'm not gonna beat a dead horse. I think we get the point. If you're enjoying this video, I don't know if anybody's here. If you're enjoying this video, make sure you subscribe to it, because I'm gonna be covering stocks that I think always have value. I think one of those is gonna be a company like BMNR. I bought some today, and if it keeps going down from where it is right now, I'm gonna buy more. I bought some today. I bought some last week. I don't think I'm up very much. Let's see if I can show. I think I'm up maybe 30%. It's not a lot, but it's I think even though that I bought it at a lower price, I think at the end of the day this is a company that's gonna just keep growing in the long term. So actually I'm up only 13%, not a lot, and I've had it for about 2 weeks, which is not bad, 2 or 3 weeks. But in the long term, I'm gonna keep adding more and more of this company. Obviously, I cover companies like this, but I also cover companies that I have interest in. I think one of my other favorite company. So I'm gonna switch gears and I'm gonna talk about Grab. So Grab is actually one of my favorite companies out there, and it is kicking butt. Grab has been so impressive, and all the interviews I've seen of the CEO, he knows exactly what he's doing. He knows exactly what he's doing. He knows exactly how to expand. Not only that, but I like the way he thinks about business. I was watching a video where he was talking about how when he first started Grab, like a lot of people were saying, you know what, you should just start working with a whole bunch of just taxi rides and grow as fast as you can and break things. But at the end of the day, he decided that might not be the best way to grow. He decided that I'm gonna work with the government of the local area, and and get that company to get the government involved and show the government that we are here to create jobs and opportunities for people, especially for people that are in a in third world countries, or people that have never ran or don't know how to do the technology end, or maybe even a government that doesn't understand um, how how something like Grab can change the economics of people within a region who want to do business, who want to get involved in technology, but they just don't know how, or they don't have the tools to do that. Um, so that's why I think a company like Grab really has an opportunity to service over, I think, about 300 million people, which is pretty impressive. So if they're able to continue to do what they're doing, they're going to be able to service 300 million people in the long term. So that's about covers Singapore and a lot of the different locations over there in the in Asia, the Grab stock. All right. So let's go look at Grab. So let's look at some, interviews with the CEO. The rise of Grab. This is about 11 months ago. I think this might be a good interview to look at. I mean, to be honest, there's a lot of people that are finally seeing, the what Grab is trying to do, and how they're looking to change how how ride hailing is done over in Asia. The crazy part about the way Grab is expanding is a lot of times in the United States, when car companies and ride hailing companies expand, well, they go straight to the source and they say, you know what, people have cars, especially in the US. But if you go outside of America, which I have, you're gonna see people driving these like not four-wheelers, but like motorcycles or tuk-tuks, they call them in other regions. And imagine that you can go to a country and you know that there's a resource of transportation, and you don't have to rent a car. You can quickly get on an app right from the airport and get yourself a Grab transportation, Grab ride to wherever you need to be. After that, you can use Grab to buy food. You can use Grab to do a lot of different types of businesses while you're there, whatever you want to do. So I think the way Grab is growing, and the people that they're servicing, is really the, how do you say this, the unserved people. In reality, is the people that most companies, like the ones in the United States, don't even imagine that they want to start serving or helping. And so in a way, I think Grab is serving the unserved and finding ways to help them. And I think that is the way you grow, because you build loyalty not only with the people that live there, but with the government. And they're gonna want you there because they see that, you know what, what you do here, your business actually has economic impact in the way our country, makes money, in the way the government makes money, and the people in that country make money. So there's going to be less reliance, more entrepreneurship, and as well as the digital technology and AI impacts. Grab has done an amazing job in getting everybody that lives in that region the ability to use AI to do their business, which is pretty impressive. So I think between Grab going and helping these countries be more technologically savvy, we're gonna get a lot more how do you say this, a lot more innovation, but a lot more and also a world where people can work, can create businesses. So anyways, let's watch one of these interviews, and that interview is gonna be this one right here. It's a pretty good interview.
We're Phoenix Energy, a family-owned oil company focused on unleashing American oil from North Dakota and Montana.
You can come out as a lion and be proud and be fierce, and you're willing to chew.
Grab started in 2012 as a rideshare platform. It's since grown into Southeast Asia's largest super app, providing food delivery and financial services is more. The term super app is this increasingly popular concept. What does super app mean to you?
Well, the super app just means an app that has multiple services. If you look at how it's evolved here in Southeast Asia, we started just to solve Southeast Asian problems. For example, safety. Safety was a major issue. We wanted to make sure rides were safe for women and children. That was a real problem. We solved that. And we're now at 99.9% safety. And then we said, okay, what's next? We realized, wait, but to get drivers, you needed to lend them a phone. How do you lend them a phone? Because many of them didn't even have a smartphone. So we said we'll start a financing business. So we have fintech built into the Grab app. So it's just like one service after another. And then when we said payments, we said, hey, the driver became an ATM, mobile ATM, and it wasn't safe for them. So we said, you know what? Let's just take out cash out of the system. The drivers have a Grab Pay wallet. The customer has a Grab Pay wallet. So all this just helped build more and more services on one app.
I was going to ask you about the fintech stuff because, obviously you're providing a service, but also fintech tends to have better margins than rideshare and delivery, which are tough businesses, right? Like how much of the economics was part of the decision where oh, that's a gap that is valuable for us to fill?
The key is two things. One, how do you create amazing data? And two, how do you create an amazing collection, right? It's easy to lend money out. The issue is collecting it, right, Bob? So as more and more services are rolled, everyday services are rolled out, more and more data is gathered. As more and more data is gathered, that data has given us an advantage to lend because we basically create a credit score across 100 distinct data points. But it's that massive data advantage that allows us to price risk much better and to collect much better.
You mentioned that Grab operates in multiple countries. I think 8 different countries, if I've got it right. I'm not sure how many are up to now. For a lot of businesses that cross borders, 2025 has been a challenging year. I mean, you alluded to it. There's been sort of geopolitical tensions and economic trade war sparked by the Trump administration. How does all that impact Grab?
Yeah, the geopolitical environment hasn't been easy. The tariff wars hasn't been easy. When factories have to close down because of the tariffs or whatever shocks that are happening, we are able to cushion all this additional employment. We work with, and governments really appreciate it because they are really concerned when unemployment shoots up. So they see that we've been able to drive not just more employment, within 20 minutes they can sign up to be a delivery partner, to be a driver. But as we got more supply, actually prices came down. So if you look at our financials, interestingly, we have more supply, which meant less search sessions, which means lower prices, which means more affordability, which means more customers. Yet at the same time, our earnings per online hour keeps going up. So our drivers earn more per hour basis. So really, we're seeing a win-win-win as a counter-cyclical platform across all our cities in the region.
It's been quite a journey. You went public in 2021. I know the stock's gone up and down in that time. Right now, sort of, in what ways is your business at an inflection point? Like what's the big urgency that you see now? Is it risk? Is it opportunity? What's next?
If you ask me, what's the biggest risk? I would say, look, for us, it's really about being stagnant. We talked about the geopolitical environment. We can weather uncertainty. We can really help communities become resilient. But we need to constantly change. So at Grab, we called it, how do you think about Kaizen, which is just 1% better every day. For every service, we just need to be 1% better every trip, every delivery order, every payment. But that's not enough. That's just not enough, Bob. We need what we call Gaikaku, which is another Japanese term besides Kaizen. It's sort of this step change. So we call it Gaikaku, G-A-I, generative AI Kaku, using generative AI to become totally a different company. And that's what we introduced, this idea of AI first with heart.
I wanted to ask you about this. I saw that last summer you implemented a company pause for a couple of months to upskill your employees on AI, something you called cyborganization. Why was this necessary at that time? What did it look like?
I think mindset change is tough, especially in an org of over 9,000 people. First, we had to really upskill folks, but you're shocked the system. So we did a generative AI sprint. I spoke to everyone, whether you're from engineering and data science, you're an AI specialist, or you're someone just signing up merchants in a tier 3 city in Vietnam. And we said, for 9 weeks, folks, we're going to focus on learning and experimenting, where the goal outcome was every grabber has to be a technologist, regardless of what backgrounds you come from. Before we started the sprint, something like 80% of folks were worried that their jobs would be replaced. But interestingly, by the end of it, 80% was saying they understand generative AI so much better and they can see how it's helping their jobs. Total mindset shift, Bob. And that's the beauty. And it wasn't just, hey, we just wanted to create a sprint for fun. We built real generative AI solutions. For example, we created AI merchant assistant now that's deployed across millions of long-tail merchants. We worked with the top R&D labs across the world, like Anthropic. And yesterday I was just looking at, we use Claude 4 to think about how to make it so much more empathetic, so much more relevant for the merchant. So now it's helping them not just boost their sales, helping them with photo edits, helping them position how they look on Grab Food, across the customers, how to pack. They even ask questions, Bob, like, oh, business isn't good, times are tough, can you give me some encouragement, sis? And the merchant assistant talks in such an empathetic, such an encouraging way as their personal best friend. So that's the type of products that couldn't have come out without this generative AI sprint.
You mentioned that you're working with Anthropic and Claude, but as I remember, you also worked with OpenAI. You were like their first partner in Southeast Asia, right? So what's that about? Like multiple partners is good. I mean, in some ways, it would be easier to lean into one system, or not necessarily.
You want to find the best solutions for these real world challenges. We want to partner the best, and we want to find the best models for specific tasks. When we first started at the early days, I remember we did a change, we did an update on the app, and then there was a bunch of really angry drivers and angry customers who came up to us and scolding us. And we were wondering why. It was a few of them were visually impaired, and because we did an update and they couldn't use the accessibility option. Today, we've been able to work with OpenAI to create, using multimodal LLMs on voice specifically, such that they can speak so easily into it, whether you're totally blind or not, and really solve your problem. And I know you must be thinking, hey, look, it's not a big set of people who are visually impaired, but you know what, Bob? It helps these individuals in such a real, large-scale impact way to them individually. We're not just deploying it for, as we think about just visually impaired, we're thinking about the elderly group, the silver generation, right? So again, we first started with large impact for a small group of people. Now with specialized training, now it's going to larger and larger groups deployed to more and more geographical markets. So there are scenarios we build on our own. There are scenarios we partner the best, like OpenAI, like Anthropic. There are scenarios we partner with the best universities around the world. But what we do believe is generally partnerships make us stronger.
As you're talking about partnerships, Uber, which was initially a competitor of yours. Grab ended up acquiring Uber Southeast Asia business, I don't know, 6 or 7 years ago. And Uber took a stake in Grab. Your Uber CEO, Dara Khosrowshahi, he sits on your board. It's kind of fascinating to go from competitors to sort of allies, right? What is that relationship like? Like how did you manage to beat Uber, which is something a lot of people are struggling with in other markets? I mean, are there lessons on outmaneuvering other global players?
Absolutely. How do local, hyper-local players like us win? It's tough. But how do you get problems that no one else can solve? Uber is a huge company. There are many great global tech companies that have huge scale, but they won't invest in very unique problems. Like, for example, mapping in Southeast Asia. We built our own maps. Our core services are all built on the most accurate maps. We found that third-party maps were just not accurate enough. They weren't updated. They didn't understand where most of our mobility fleet are two wheels, are motorbikes. That's why we built Grab Maps. Right. And it's not only provided us a huge competitive advantage, a huge cost advantage, but it's become now a B2B enterprise service that now Amazon buys from us, Microsoft buys from us. That's why we can really understand these local problems and solving them in a hyper-local way that leads to a much better service that creates higher loyalty, higher retention.
I love hearing how Anthony saw something that other big players were missing and leaned into it, and now has clients like Amazon and Microsoft reliant on it. One of the things Grab has been dedicated to is...
I had no idea that Amazon was buying stuff from Grab.
Using a lot of electric vehicles, EVs. We've partnered with the likes of BYD. In the US, a lot of organizations have rolled back sustainability efforts this year. Like, what role does that play in your roadmap looking forward?
For us is two parts. The first part, it is about sustainability, but it's not sustainability for the sake of sustainability. We have to be honest with ourselves, Bob. Climate change does impact livelihoods. Our drivers, just recently in Philippines, when there was a massive flood, our drivers couldn't move. That impacts business. That impacts their lives. That impacts their livelihoods, our lives, and our business metrics dropped in Manila when that happened. We have to care about the environment. When we think about EVs, we think of it in that light. We need to hit our goal of being carbon neutral by 2040. And EVs is just part of one of the solutions. We have invested several $100 million in low emission vehicles that are really primarily on our platform so that we can drive this agenda. Not all markets have EV infrastructure ready. You want EVs everywhere, but the problem is a lot of the charging infrastructure just isn't ready. So we had to partner governments to make sure the EV infrastructure is strong. We had to work with many companies around to make sure financing is available, not just for the EV cars, but also for EV bikes, motorbikes, but also for PMDs, personal mobility devices. And then, of course, building, as I said, with Grab Maps, we've been able to cut travel time, which again reduces carbon because of our maps, because of our AI that is an auto-adaptive across our entire system. So for us, honestly, Bob, it is mission critical, and we have very clear goals, very clear plans to get there.
I wanted to ask you about also autonomous vehicles, which rideshare companies over here, Uber included, are making a lot of deals around, pretty focused on. You've been a little bit more cautious about AVs for your markets.
It is going to take a longer ramp-up time in Southeast Asia. Why? Because the road infrastructure is very different. Outside of Singapore, it is much messier, to say the least. It's much less developed. If you've been to Jakarta or Bali or Phuket, it is behind many of the road infrastructures that you're used to in the West.
Yeah, no. The whole, yeah, in that world where people are driving motorcycles to deliver food, and riding donkeys, whatever it is, like autonomous car delivery is gonna be something that's gonna, it's not gonna be it's not gonna take over that industry for quite a while. But I wanted to just show you this. So this is my social sentiment stock analyzer. So I put in the stock that I'm interested in. So in this case, I'm interested in Grab. It tells me the price is $6.32. That's an approximate price. So these are some of the services that you got: Grab Mobility, you got Grab Food, Grab Mart, Grab Pay, and Grab Finance. Grab also has Grab Fin, expands beyond payment to offer lending, insurance, and other financial instruments, especially catering an unbanked population. Enterprise offering. I was surprised to see that Grab was actually working with Microsoft and Amazon. That they buy map related data from them. These are some of their future goals. These are some of the YouTube sentiments, what they're saying, a quick summary of what's going on in those videos. But this is also interesting, where you see analysts that are, have a buy or a hold on the company or overweight. Here you're seeing, $5.60. You're seeing that $8, and then as you can see there here, Dewey Capital, Dewa Capital, $4.60. But the highest here, as you can see, is Evercore ISI Group at $8 a share. That is their 12-month guidance on the stock. But there are professional news and analysts reporting generally expresses cautious opportunity for Grab. The company has demonstrated strong revenue growth and achieved significant profitability milestones, including positive adjusted EBITDA in 24-25, its first positive free cash flow in 2024, and narrowing net loss. And then it says strategic expansion into financial services and enhancement of its super app ecosystem are seen as key growth drivers. However, analysts also highlight significant risks such as intense competition for the region, players like Gojek and Food Panda. But these are not, the problem with this is, like, yes, they're competitive, but like they don't provide all the services that and are not as sticky as how Grab is. And then increasing regulatory scrutiny around driver pay and fintech licensing. I mean, obviously, this was a problem initially when Uber actually came about, and then obviously inherent volatility that they can't even control. Recent downgrade to hold by HSBC. We don't like HSBC's grading levels, because they have been found that they're actually lying to investors. So we can't really rely on HSBC ratings. So profitably, they're turning around on the profitability, strong market position, and super app strategy, competitive and regulatory headwinds, and valuation concerns. So here are some of the risks. I mean, as you can see, market volatility. They're high beta company. They're small. They're very low market cap. Regulatory risks. Obviously, the cool part about Grab is, from what the CEO said, is that they've decided to work with the government right from the get-go, rather than just going on their own and just and then letting the government catch them. They decided to poll the government of the Southeast Asian and show them the opportunity that a company like Grab would bring to the regions, which is pretty impressive. Competitive landscape, you got GoTo, but GoTo, a company like GoTo has gotten itself into quite a couple of trouble around laptops that were supposed to be given to kids that actually need it. Instead, they decided to keep the laptops or sell the laptops and keep the money. Delivery Hero, Southeast, also Food Panda. Like Food Panda, a brand under Delivery Hero SE, a significant competitor in the food delivery service sector. Once again, that is a small sector of what Grab does. Grab does a lot more than this, which makes them even way more sticky and more likely that there's something that Food Panda doesn't provide. And so users are just going to flip and go over to a company like Grab. Say Limited, a tech conglomerate with a strong presence in e-commerce, and InDrive, all an international ride-hailing app. Joyride, a local Philippines car ride-hailing app. So there's obviously a lot of like car hailing, but then once again, Grab does way more than that, which gives them that stickiness and key competitive advantages. Profit. So if we go into here, what companies are holding the most shares in this company? Well, from their SEC filings, institutional ownership in Grab Holding Limited shows increased trend. Several institutional investors, such as Park Avenue Securities and Ascension Asset Management, have significantly increased their stake in recent quarters. So holding a total of about $3 billion shares. So if you look here, you would think that one of Grab's biggest competition would be Uber, and Uber can easily go in there and eat their lunch. But at the end of the day, it's a different market, different service, different type of business in reality, different types of customers. The end goal is the same, but the entire culture and region is not the same at all. So here you have 535 shares that Uber owns. You got SB Investment Advisors, 401. Toyota. Why would a car company, you would think, why would they get into here? Well, Toyota, I think, is involved in a lot of, they sell a lot of, I think they're involved in motorcycles, I think. I don't know, but I think they are. So obviously Toyota is getting into there. I mean, they sell cars, obviously. BlackRock, Morgan Stanley Investment Management also has some of the shares. So these are some of the top holders of Grab. But yeah, let's continue this interview.
That's one. The second is that the labor costs, again, outside Singapore, very, very much lower labor costs. So for AVs, autonomous vehicles, to take off in the region, it needs not only to be as safe as what you see in the US today, but it needs to be much cheaper. Those price points that you see in the US just can't work here. It just needs to be much cheaper. But we are already experimenting. We've deployed our autonomous shuttle. We're partnering many autonomous vehicle companies across the region, globally for the region. And we are just going to just roll out experiments. Many AV companies might not care about drivers. For us, we have to care because drivers make up 99.99% of our business today. So we have to think about not just displacement effects, but also the augmentation benefits. So we're really thinking about saying, hey, for every driver, how can he become a safety driver? How can they become remote pilots doing edge cases? How can we think about them becoming data labelers? We've been upskilling our drivers for a long time, Bob. In the driver app, you would see how we partnered Master, how we partnered Microsoft to have our curriculum in micro-learning segments. We think about how to create new jobs as we think about the AV world.
It sounds like you see plenty of opportunity still in the region that you're in to not have to look further, or how much as you say, you're in 8 countries and all these cities. Just expanding in those markets is enough right now.
There's so many problems to solve in the region. And the region is 600 over million people. It doesn't have the wealth of America for sure, but it does have lots of babies. It's double the size of America, the population size. But we literally help reduce unemployment. We generate 0.7% of the GDP of the ASEAN nations, of the big ASEAN nations, right? But the penetration is still low. If you look at mobility, it's in the low double digits in some markets, in some single digits. Do we see huge upside? Tremendously. Our fintech is our fastest growing vertical, and we are looking at dispersing billions of dollars. We just raised $1.5 billion. It was 8.5 times oversubscribed. We are looking at M&A opportunities, even globally.
Here in the US, there is so much attention paid to China, to China's economy. From your perspective, like, is the US too obsessed with China? I mean, what do folks here most misunderstand or underestimate about other Southeast Asian and Asian businesses?
The culture here is one that needs tremendous humility, but tremendous hunger, all at the same time. Our leadership culture is based on 4H, right? Of hunger, of humility, of honor, and heart, right? Hunger, look, we know we just have to outwork everyone because it's a tougher market. It's much lower margins. Prices are much lower, and just have a much lower cost structure. Second, you just need to be extremely humble. Know that you're not the smartest guy in the room. In fact, most people are smarter than you, so you just gotta take feedback all the time. I get scolded. Just recently, last week, I got scolded by drivers, by driver leader groups, to say, "Hey, you're not doing a good enough job here." And I love getting that feedback. Right? Just tell it to me so I can learn and iterate. And then from there, I called my leaders and said, "Look, these are things we got to change." And the good news is, because the culture is so prevalent that they can take the feedback and iterate very quickly, then it's hard to serve. The culture, you asked me, in those days, and this was pre-Dara, with Uber. The culture to work with governments, not fight them, head on, but work with them and say, look, we're in this together. The heart to serve communities, the passion to serve, whether it's the vision impaired community, whether it's the silver generation, helping governments digitize their communities, and just honor that whatever we say, we're going to do. So I can't talk about American obsession, but I can say I think the culture is one part that has made a lot of our global peers sort of look at Asia and say, hey, these are things that we could learn as well.
Early days of Grab, I understand, like, you put all your money into the business. You're working 20 hours a day. You're talking about the hustle there. Has the job gotten any easier? Or is it just different now?
Bob, my hours haven't changed. 13 and a half years later, I still wake up, for this interview at 6 a.m. I finish work at 11:30. Look, the reality is, it doesn't change, and I don't want it to change in the sense of I still love, every week, my assistant, now I can afford to have an assistant, really has been able to tell me in 26 weeks of the year you traveled for 25 weeks. so because I need to go to the ground. In the early days, I was by the large monsoon drains that were really smelly, pounding the table, screaming louder than the competitors to make sure we were recruiting drivers, having, the local chocolate milk to, incentivize them to sign up with us. That hasn't changed. Last week, I was still with drivers, learning from them and getting scolded. Not much has changed.
You have so much passion about this, and certainly your expectations are high. Are you hard to work for? Like, I mean, you're demanding.
People would say very high intensity. They would say, but I do believe in this concept. I'm from a faith that believes that you can come out as a lion and be proud and be fierce, and you're willing to chew anything in your path, but at the same time also sort of have the humility of a lamb. And so I always talk about how do you be really bold but have tremendous empathy. A lot of times you're wrong, and I'm wrong, and that we're a constant work in progress. So I think it's like showing love all the time and caring for your people, while at the same time holding a really high bar because you love them, because you want them to do better, because you believe that customers expect much more from us, and society wants to see many companies that have triple bottom line fail. So you got to prove to them that a triple bottom line company can not only survive but thrive.
So what's at stake for Grab right now?
What's at stake? A lot's at stake. We have 13 million drivers and merchants registered on Grab. We are probably one of the largest enablers of jobs. We need to hold ourselves to such a high bar. We must thrive and help them along this journey to really be embraced in an AI first, in a AV hybrid world. And the best way is to start early, invest in them now, even before AVs are here, and reflect those values in every decision we make every day.
Well, Anthony, this was great. Thanks so much for doing it and taking the time on an early morning.
No worries, Bob. For you, anytime.
When Anthony used the...
Oh, there you go. As you can see, that's the CEO. And he is, from how he's speaking, you can tell how much passion he has and how he really wants this business to grow. And as you saw, like he travels a lot all around the world, whether to speak about the business, to get the name out there, or probably to just to grow the business across regions and make relationships. So definitely, like, I love how passionate the CEO is. And Anthony, Tan. I think we're going to hear more of him in the coming years. I would love to see like an interview of him in the All In podcast. I think it would be a really good interview to watch because they ask pretty good questions. But for tonight, that's all I got. Thank you so much for joining me. If you enjoyed this video, make sure you subscribe. Make sure you like this video.